All right, let's hit the movers board right away because the tape is basically flat and these gaps are not flat. SPY barely green, QQQ a touch red, VIX under 19.5, breadth mixed. So when you see MRNX up 167%, RDAC up 147, YJ up 126, yeah, that stands out. First thing the markets desk is doing here, separate real stock momentum from product mechanics. MRNX is a 2 times long mRNA ETF, so monster move, but it's tied to Moderna exposure. RDAC is the cleaner small cap SPAC style runner, 1446, 5.5 million shares, 127 times relative volume. Oof. Then YJ, 394, 47 million shares, and the relative volume number is just stupid, 8,882 times. That's not a typo on my end. All right, let's pull up RDAC, because this is the wild one on the pre-market board. Oof, look at that range. RDAC was showing roughly plus 140% on the movers board, price around the mid-14s, while the actual index tape is basically sleepy. SPY flat, QQQ slightly red, breadth mixed. So yeah, relative move is massive, but the 1-minute chart is not clean upside. This opened up near 1774, tagged just under 18, then failed hard. Lower high, lower low, lower high, lower low. That's the whole morning. The flush got nasty through 16, then 15, and the real volume showed up on the sell candles. Low is 1243. Now it's trying to bounce back into 1450-ish. But let's be clear, that's a recovery attempt, not a confirmed trend change. Watch 1450 to 1460 right here. If that area can't hold, this bounce gets suspect fast. Now catalyst check. I'm flipping over to the news tab, and I'm not seeing a fresh press release sitting here explaining the spike. That matters. RDAC is a SPAC-style shell company, Rising Dragon acquisition, small market cap, China-based, and when these things move without a clean headline, the tape itself becomes the story. Relative volume on the board was huge, about 127 times normal, so traders are clearly involved. But no fresh company PR means I'm not going to pretend there's a neat fundamental driver. Here's the risk check, and this is where the markets desk slows it down for 2 seconds. Dilution screen is ugly. Overall risk marked high. Active equity line showing, runway barely a fraction of a month. No active shelf and no pending S1 showing here. But the overhead supply profile is still a real issue. So on the chart, the clean levels are simple. 1243 is the morning low. If that cracks, the flush is back in play. Above, 1770 to 18 is the failed open zone, and until price earns that back, the bigger structure is still a breakdown with a bounce inside it. Fun chart, huge move, but tiny float shell company momentum can snap both ways. All right, let's pull up Moderna, because this is the big liquid biotech on the board and the chart is doing cartoon stuff. Daily chart first. Coming into this move, mRNA wasn't chasing fresh highs, it was basing. Old structure was low 60s support, mid 60s resistance, and that pullback from the prior run had lighter volume, not panic volume. So the setup before this morning was pretty clean. Base, ceiling, no drama. Then boom, board price is up around 115. Last intraday read near 117, and that basically nukes the old daily range. SPY's flat, QQQ's barely red, breadth is mixed. So this is not index beta. This is Moderna trading its own tape. Quick catalyst check on the news tab. The company stack we've got shows that FDA approval earlier this month for Mflusiva, Moderna's flu vaccine, plus the phase 1 Ebola vaccine trial headline and the Q2 update from late July. I don't have a fresh same-minute headline sitting here that explains the entire gap, so I'm not going to make one up. When the chart moves like this, the markets desk goes tape first. Price, volume, and where the stock actually accepts after the spike. Now let's drop down to the 1 minute. Oof, look at that wick. This opened around 68.71, tagged a low near 67, and then ripped all the way to 130.27 in roughly 90 minutes. That's a monster move, and the volume did confirm it. We had multiple spikes north of 200,000 shares a minute during the push, so it wasn't just some sleepy print getting marked up. But here's the character change. After 130, the stock stopped making clean new highs and started basing lower, with the last read around 117. That 118 area is the shelf. Above 118, you can at least argue the pullback is stabilizing. Under 118, it's still cooling off from a parabolic move, and those can snap around fast. Scoreboard levels here. 130.27 is the high. That's where momentum has to prove it can actually reclaim the top of the move. Around 126 was the upper consolidation area, and 118 is the important shelf right now. Not a recommendation, just the tape. If mRNA can't accept back above that shelf, the move is still in digestion mode. If it reclaims and holds, then the chart gets a lot more interesting into the open. Remember, FOMC minutes are later tonight, but this morning, the macro tape is pretty quiet. Coming up, we'll swing back to the movers board, and YJ is on deck for a deeper hit. All right, let's pull up Apple. Mega cap check here, because QQQ is basically flat, and this one's parked right on a real decision zone. Daily chart first. AAPL is showing around 310.03, and this is not that biotech style rip we've been chasing all morning. This is base work. Big difference. The daily structure ran from the mid-270s up into the 330s, then pulled back, and now it's trying to build in that 300 to 310 area. So for the markets desk, this is simple. Apple is not exploding, but it is holding where it needs to hold while the broader tape is mixed. Now, look at the shape. Support keeps showing up near 300, maybe 300 to 305 if you want the zone, and the 50-day area is right around 309. That matters because the price is basically sitting on it right now. Above, the near-term pressure point is roughly 316. That's where the 20-day area sits. And then the bigger roof is 330 to 335. So scorecard is clean. Above 316, Apple starts repairing the daily look. Above 335, that's the real top of base breakout zone. But if 300 breaks, oof, that base loses a lot of credibility fast. Not a trade call, just the levels that tell us who's actually in control. Let's drop down to the 1 minute. This is tight, really tight. Open was around 309.81, low near 309.35, high 310.58. That's only about $1.20 of range, so don't pretend this is some monster momentum tape. But the structure is quietly higher. Initial dip, then small higher highs, higher lows, and the important part, volume actually showed up on the push through 310.30, 310.40, 310.50, into that 310.58 high. Right now it's chilling just above 310. If buyers keep defending 310, fine, the intraday base is still alive. If 310.58 gets taken with volume, that's the first clean upside confirmation. Below 309.35, that's the morning low, and the whole little grind gets called into question. Quick catalyst check so we're not just staring at candles in a vacuum. The freshest Apple press item here is mineral sourcing recognition from August 11th. Probably not the tape driver. The bigger recent fundamental anchor is the July 30th quarter. Revenue $109.4 billion, up 16% year over year, gross margin 50.1%, EPS 2.02, up 29%. That's why people still care about the base even when the Nasdaq is sleepy. So Apple's not the loudest chart on the board, but it is a clean mega cap level chart. Coming up, we'll flip back to the movers board. Then we've got that YJ deep dive on deck. All right, let's hit the movers board again. The index tape is basically flat, but this board is not flat at all. SPY up a hair, QQQ slightly red, IWM barely green, VIX under 19.5. So when you've got MRNX up 172%, YJ up 141%, RDAC up 135%, and TNON up 108%, that is pure single name action. Oof, look at that stack. MRNX is still the headline percentage move. YJ just gave us that $4 hit we flagged earlier. RDAC is still trying to decide if it's a bounce or a trap. And TNON is quietly massive here. 13 million shares, 32 times relative volume, healthcare device name, high dilution risk. That's the board. Now we go chart by chart. First one, MRNX on the 1 minute. This is still the top print on the board at 85.26, up 172%. About 306,000 shares. And yeah, this is the leveraged mRNA exposure, so I'm not going to relitigate the product mechanics. The trade here is simple. Does the Moderna complex keep pressure on, or does the ETF start bleeding momentum? For me, the clean little tape check is the 85 area. If it starts living below 85, that's the first sign this top board move is cooling off. If it keeps accepting above that zone, then the squeeze energy is still there. But because it's a leveraged ETF, the candles can get jumpy fast. I want clean volume behind each push, not random air pockets. That's the difference between momentum and just a headline percentage number. YJ is the cleaner one to check right here, because that $4 level we flagged earlier, yeah, that got hit. Last board print is 4.1999, so call it 420, up 141% on 51.8 million shares. That's not normal interest. Relative volume is showing almost 9,700 times average, which is just insane. So the question now is simple. Is $4 acceptance, or was it just a pop and reject? With price still above 4, it's acceptance for the moment, but I don't want to see it start living under 4, and then especially lose 350. That 350 area is still my fade line. Below there, the character changes from momentum runner to people getting trapped on the backside. Medium dilution risk here too, so respect the tape.
Thanks, Markets Desk. Breaking macro headline first. ProTerminal's newsroom is tracking comments from Philadelphia Fed President Patrick Harker. He says a rate cut is not on the table yet. What we know, the Fed tone is still cautious, even with some inflation cooling in the background. What we do not know yet is whether that's just one official keeping optionality or something the broader committee is lining up behind. And we're not going to pretend we know that before the wires give it to us. Market read right now is actually pretty contained. SPY around 768, basically green by a hair. QQQ around 717 and flat to slightly red. VIX at 19.46 and lower on the morning. So the tape isn't panicking, but rate-sensitive pockets, real estate, utilities, anything that lives on cheap money just got a little reminder that the Fed is not handing out dessert before dinner. Next headline, U.S. 10-year Treasury yields are spiking as bonds sell off. That matters because the 10-year is basically the market's mortgage rate, stock valuation rate, and corporate hurdle rate, all wearing the same trench coat. When investors dump bonds, yields rise, and that can pressure longer duration growth names because future earnings get discounted harder. Cross-asset check. TLT is sitting around 81.94, IEF around 93.08, and the dollar proxy is softer at 28.06, down about 0.3. Gold is higher too, around 400.73. So yeah, the dashboard is not perfectly clean. Bonds are trying to price tighter for longer, while gold and the dollar are telling you positioning is still messy. Very macro. Very annoying. Third one. Big tech earnings are lifting sentiment. The desk is seeing stronger results out of major tech, with Apple and Microsoft tied into that broader support story. Why it matters? If rates are leaning against valuation, earnings have to do more of the heavy lifting, and mega cap tech is still the group big enough to move the whole index furniture around the room. QQQ is only around 717.40 and slightly red. So this is not some clean, all-clear rally, but it does explain why the broader tape is holding up, while the Fed headline and the 10-year are both a little unfriendly. Coming up, we'll kick it back toward the movers board and see which single names are actually ignoring the macro noise.
Thanks, Macro Desk. All right, YJ is the chart now. Look at this thing. Board had it around 530, up about 200%. While the tape is basically mixed. SPY barely green, QQQ basically flat red, breadth messy. So yeah, this is not market beta. This is its own little fireball. On the 1 minute, the available tape shows the ugly part first. Started near 227, flushed into about 203, and then boom, trend flip. Higher lows, bigger candles, volume shows up, and just goes vertical into 605. Current read is around 528, so it's off the high, but still miles above where the move started. Here at the markets desk, the thing I care about is not the headline percent move anymore. That part already happened. The question is, does it build or does it rug? Oof. Look at that upper wick into 6.05. That's the seller showing up at the exact spot everybody can see. So I'm flagging 6.05 above as the reclaim. If it can't chew through that, it's just a pullback inside a parabolic move. Underneath, 4.30 is the cleaner support area from the candle read. That's the cooling line. Above 4.30, bulls can still argue consolidation. Below 4.30, the character changes fast because this thing moved too far, too quickly. Relative volume is over 10,000 times normal on the board, so participation is real. But with a chart this steep, exhaustion can be real too. Now, catalyst check. Because with these small China consumer names, you really want to know if there's an actual headline or if it's just flow. Latest press release I've got is Yunji saying it reports first half 2026 results on August 20th. That's tomorrow, not today. I don't have a fresh same-minute press release explaining this spike. Company itself is social e-commerce out of Hangzhou, beauty, household goods, food, apparel, that whole specialty retail lane. Market cap is only about 21 million, shares outstanding about 4.9 million. That's the recipe for air pockets. It can move hard both ways. Risk page matters here quick. Dilution read is medium overall, but the important part, active equity line, is marked true. No active shelf, no pending S1 in the data, but an equity line being active means supply risk is part of the background. That doesn't mean it has to fade right now. The chart decides that. But it does mean you don't treat a small cap vertical move like a clean mega cap breakout. Back to the chart. Scorecard-wise, that earlier $4 flag already did its job. New live map is simple. 6.05 above is the lid, 4.30 below is the fail check. Coming up, we'll flip back to the movers board and see if this is still leading or if the next runner is taking the baton.
Thanks, Markets Desk. All right, quick macro check. Because after all those single-name rockets, the index tape is basically doing the pre-market shrug. SPY's at 767.73, up 4 basis points. QQQ 717.42, basically flat to down a hair. IWM 300.66, up 0.14%. And VIX is actually softer at 19.47, down about 0.9%. So the headline here is not panic, it's digestion. No fresh 8:30 data bomb on our calendar feed. The real policy event today is still the FOMC minutes at 6 p.m. Eastern. And yeah, the Harker headline keeps the cuts aren't on the table yet vibe in the room, but the bond proxies are not screening stress right this second. TLT is 81.94, up 0.34%. IES 93.08, up 0.16%. That's the nuance. The yield spike headline matters, but on the portal tape, bonds are trying to stabilize. Macro is annoying like that. It refuses to be a clean tweet. Now here's the part that matters, even if you only trade US stocks. The dollar and the yen are doing some of the steering. Dollar proxy is down at 28.06, off 0.28%, while the yen proxy is up 0.35% at 57.68. That's a little pressure valve opening. Softer dollar gives commodities some oxygen. And sure enough, gold is green, 400.73, up 0.55%, while oil is also up, 131.11, plus 0.34%. So the chain is pretty simple. Policy uncertainty is still there, but the dollar backing off takes a little heat off global liquidity. Gold catches a bid, oil stays firm, and equities are left in this weird middle seat on the plane. Not terrible, not comfortable. For SPY, the clean intraday range from the tape is 767.40 support to 768.10 resistance. Until one side breaks with real volume, the macro desk is calling this a holding pattern, not a victory lap. Okay, last piece of the macro board here. Crypto proxies are giving you a tiny little risk appetite check, but it's not exactly a clean green light read. Beto's red at 870, down about 1/3%, while coin is basically flat at 146.26, and MSTR is actually green, up 0.4 around 92.92. So yeah, crypto-linked equities aren't falling apart, but the actual Bitcoin proxy is a little soft. Tie that back to the rest of the tape. VIX is still under pressure, down about 0.9% near 1947. The dollar proxy is lower at 28.06, and SPY is still boxed in. 768.10 on the upside, 767.40 underneath. That's the intraday line in the sand for me on the index chart. Above 768.10, maybe the tape wakes up. Below 767.40, that quiet range starts getting a little less friendly. Calendar-wise, keep the radar clean. NBA mortgage rate at 11, EIA crude and gasoline at 2:30, and then the big one, FOMC minutes at 6. Until then, this is still a chop tape, not a trend tape. All right, macro radar set. Let's hand it back to the live tape and see where the actual action is.
Thanks, Macro Desk. All right, Markets Desk is back on the movers board. And yeah, this is still not an index tape story. SPY's barely green, QQQ's basically flat red, IWM's up a hair, VIX is down. Bread mixed. But look at this board. YJ's still sitting on top, up about 220 at 556, 62 million shares. Relative volume over 11,000. That's insane tape. MRNX next, up 175 around 86. Then RDAC, TNON, mRNA, all still huge. And don't ignore the red side either. PFSA down 46, WETO down 30. So the game here is simple. Board first, chart second, no storytelling unless the candles agree. Let's go straight to YJ, because the board leader still has the steering wheel. 1 minute chart. Price is around 556, up 200+%, and the volume is the whole story. 62 million shares versus a tiny normal baseline. We already put the $4 area on the scoreboard earlier, and that one hit. So now I'm not chasing the headline number, I'm watching acceptance. 605 is still the high reclaim level. 430 is still the fail check. In between there, if the candles keep holding above 5 and the pullback stays shallow, bulls are still defending it. But oof, if you start seeing upper wicks stacking under 605, that's not strength, that's supply showing up. Small cap China retail name, medium dilution risk in the background. This can move both ways brutally fast. MRNX next, 1 minute chart up. This is the leveraged mRNA linked one, so I'm treating it like a momentum read, not some clean fundamental story. The number I care about right here is 85. It's trading around 86 and change on the board, so it's still above that line, but you can see the move isn't as vertical anymore. That's the difference. Above 85, still holding the open impulse. Start losing 85 and this goes from runner still alive to, okay, momentum's cooling off fast. Volume is there, but don't chase the headline percentage on this one. Just watch whether buyers defend that 85 shelf or whether it starts leaking back through it. Now, RDAC and this one, totally different risk profile. SPAC/shell name, high risk tape, big percentage move, and it's sitting around 1323 after being way hotter earlier. The reclaim spot is 1350. That's the line I'd score it against. If it can't get back over 1350, then this is still a failed pop setup. Sellers are controlling the bounce, and you don't want to pretend it's strong just because it's still green triple digits. But if it firms up and reclaims 1350 with actual 1 minute volume, then okay, the bounce has some structure again. Right now though, 1320 area is decision time. Either it bases, or this thing starts acting like a fade. TNON now. This is the $11 test for me. We've got 10 in medical trading right around 1110, up about 104%, and the volume is not fake on the board. 13.8 million shares versus about 400,000 average, so roughly 34 times normal volume. But here's the catch. High dilution risk, medical device small cap, market cap under 8 million. So yeah, the move is loud, but the risk is loud too. I'm scoring this off the $11 line. Above 11, buyers are at least trying to defend the breakout area. If it starts losing 11 cleanly and can't reclaim it, that's where the rug risk shows up fast on a name like this. Now, flip back to the Moderna complex. mRNA first, because the underlying is still the anchor. This is wild relative to the tape. SPY is basically flat, QQQ's a hair red, and Moderna sitting near 118.80, up almost 89% with 16.4 million shares already through. That's the real stock leading the story. MRNY after that is the income ETF wrapper. and it's up 76% on about 800,000 shares, 5 times normal volume. So the rotations still make sense. mRNA is the driver, mRNY is following the volatility, and mRNX was the juiced version we already hit. I'd rather read the underlying first here. If mRNA holds firm, the wrappers keep getting attention. If the underlying stalls, those products can get sloppy in a hurry. BIVI first, quick momentum check, then I'll flip EHGO. BioV's around $1.36, up about 41%, and the board showing 13.9 million shares with 135 relative volume. So yeah, that's not a sleepy biotech print. That's real pre-market attention. But the risk tag matters here. Small cap biotech, roughly 7.1 million float, dilution risk showing high. For me, the clean version is simple. Can it keep accepting above 135 and then actually build through 140? If it keeps wicking over 140 and snapping back, that's trap behavior. If dips keep getting bought above that prior shove zone, okay, that's cleaner. Now EHGO, different flavor. Low float China Industrials name, 239, up 32%, 17.7 million shares, about 20 times relative volume. Float's only around 1.2 million, so this can move fast both ways. I'd treat 240 as the line on the tape right now, and 250 as the spot where chasing momentum either confirms or gets rug pulled. Alright, loser check before we hand it off. PFSA first. This one's ugly. 1470, down about 46%. The board volume is only about 290,000 against that monster average volume number, so I'm not going to pretend the relative volume print tells the whole story in pre-market. But price does. For PFSA, 15 is the level I care about. Below 15, sellers are still in control. Reclaiming 15 would at least say the flush is trying to stabilize. And again, tiny float, high dilution risk showing, so don't treat the red candle like it's automatically a bargain. Now WITO, 2307, down 30%, but this one actually has 5.4 times relative volume, so there's more active pressure here. I'd watch 23 as the battle line, and 22 below as the next danger spot. If it can't hold 23, that's still heavy into the open. If it bases above it, okay, then maybe the panic cools off. That's the movers board speedrun. Next up, we'll kick it forward and keep the tape moving.
Thanks, Markets Desk. Quick news brief here at the macro desk, and we're starting with the biggest wire on the board. Moderna and Merck's personalized cancer vaccine met the main goal in its first late-stage melanoma trial. The combo with Keytruda significantly extended the time patients lived without melanoma coming back. That matters because Moderna's whole investor story has been trying to prove it's more than a respiratory vaccine shop. And this is the kind of pipeline headline that can actually change the debate. Still early in the commercial sense, full data, regulators, pricing, rollout, all the boring but decisive stuff still matters. But yeah, this is why biotech is wearing the cape this morning. Second Moderna headline. The stock has doubled on that cancer vaccine readout. That's the market taking the clinical headline and immediately trying to put a new multiple on the company. For context, SPY is only up about 0.2%, around 769. So this is not risk on lifts all boats. This is a single name repricing. The dry macro translation: when one biotech doubles before breakfast, your spreadsheet has officially asked for coffee. Next up, Apple. Tim Cook's final earnings call as CEO came the same week Apple hit a $5 trillion market cap. Big headline, big number, and the market implication is pretty simple. Leadership transition risk now sits on top of one of the most owned stocks on planet Earth. The story says the stock rose 2,180% during Cook's tenure. So investors are going to focus less on the victory lap and more on the next playbook. Services, AI, China, capital returns, and whether the successor can keep that premium valuation glued together. At $5 trillion, the margin for meh is not exactly generous. Microsoft's key headline. Satya Nadella says Microsoft's own AI chips are driving up to 40% efficiency gains versus relying only on OpenAI technology. That matters because AI demand is great, but AI costs are the toll booth. Compute, power, chips, data centers, the whole expensive circus. If Microsoft can lower unit costs and control more of the stack, investors read that as potential margin protection and less partner dependence. With QQQ sitting near 719 and modestly green, this is exactly the kind of mega cap AI efficiency story that keeps the index bid, even when rates are being annoying in the background. And one more active name headline. Yunji says it will report first half 2026 results tomorrow before the open. That matters because YJ is already one of the loudest small cap movers on the screen this morning. So now the tape has a nearby fundamental checkpoint instead of just momentum and volume. Investors will be watching for revenue trends, membership traction, and whether profitability is moving the right way. Smaller e-commerce names can swing hard around prints, so this is one where the news calendar is part of the volatility setup. Coming up, we'll kick it back toward the movers board and see what's actually holding those pre-market bids. All right, breaking on the ProTerminal news desk. S&P Global shares are falling after the company missed profit estimates. Here's what we know right now. Earnings came in below analyst expectations. The stock is getting hit, and the read-through is pressure on confidence around cyclical sensitive names. What we don't know yet from this alert is the full guidance color, or whether investors will treat this as a one-company margin issue versus something broader in transaction activity and credit data. Market read. SPY still around 770.8, up about 0.4. VIX is under 19.4. So this is not a tape-wide fire alarm yet. More like one very loud smoke detector in the cyclical's hallway. But SPGI matters because it touches ratings, data, and capital market plumbing. Next headline. PayPal beats earnings estimates as the turnaround keeps moving forward. The facts here are cleaner. Earnings came in ahead of expectations, and the desk is seeing that tied to progress in the company's recovery plan, plus resilience in digital payments. Why it matters. Payments are a pretty good window into consumer and merchant activity. So, side by side with the SPGI miss, this is not some neat little macro story where everything is either great or terrible. Earnings season, as usual, has chosen chaos. Very on brand. Third one, and this is a big policy market headline. The US government has taken a 10% stake in Intel. Factually, that means Washington now has a larger ownership role in a strategic semiconductor company. And the market has to think about Intel not just as a chip stock, but as part of the national supply chain map. Why it matters for investors? Government backing can be seen as support, but it also brings questions around governance, strategy, and how much policy influence comes attached. QQQ is still green by about 0.4, so broader tech isn't rejecting the headline this morning. But for INTC, policy risk and policy support are now stapled to the cap table, like a receipt you can't throw away. Coming up, we'll hand it back into small cap momentum and see where the fast tape is actually biting.
Thanks, Macro Desk. All right, Markets Desk is back on the movers board. And look, the backdrop actually matters here. SPY up 0.4, QQQ up 0.4, IWM up almost 0.9, VIX red. So small cap oxygen is there. Top of the board is still wild. YJ up about 200%, MRNX almost 200, RDAC up 129, TNON basically a double, and mRNA itself still up 96. Then we've got the secondary Moderna products, EHGO still holding a bid, Bivy trying to stay alive, and the red side with PFSA and Weedo. Fast board, big gaps, huge relative volume in spots. So we're not doing theory here. We're going row by row, 1-minute charts, who's real and who's just a trap. Let's go straight to YJ, still king of the board. This is not a normal gapper. 523, up about 200%, 68 million shares already, and the relative volume number is just stupid. 12,800 times normal volume. Oof. That means the crowd is here. It also means the rug pull risk is here. We already got those $4 scoreboard hits earlier, so the markets desk has to keep score. Nice move, but now the question is acceptance. I'm using that earlier 605 spike as the clean reclaim spot. If it can get back above 605 with real volume, then the high of day conversation comes back. If it can't, and especially if it starts losing that 430 fail check from earlier, this goes from squeeze tape to unwind tape really fast. Also, tiny company profile here, around 21 million market cap, about 4.9 million shares outstanding, medium dilution tag. So yeah, the chart is exciting, but this is still a parabolic small cap. MRNX next, and this one, just be careful how you read it. I'm pulling the 1 minute up, but this is the daily target 2x long mRNA ETF. It's not Moderna common stock. Board has it at 91.75, up about 193%, but only around 378,000 shares traded. And because it's a leveraged product, the candles can get super exaggerated. So yeah, it's on the board, it's moving fast, but I'm not treating MRNX as the anchor for the story. This is the echo of mRNA, not the source signal. If it starts whipping candle to candle, that's exactly what these derivative products do when the underlying is going nuts. Now, RDAC. This is the one where that 1350 line mattered, and there it is, we got the hit. Current board print is 1340 though, so it's not exactly running away above the flip. It's sitting just underneath it, and that's the whole read right now. SPAC/shell company squeezes can look insane on the way up. This thing's still up about 129%, 5.8 million shares, relative volume over 134 times, and the float's only about 4.3 million. But if 1350 becomes resistance instead of support, that turns from breakout energy into failed reclaim energy pretty fast. If it can get back above 1350 and actually hold there, the squeeze stays alive. If it keeps rejecting right here, then the tape gets way more two-sided. And remember, this is a high dilution risk shell name, so I'm reading the level, not chasing the headline percent. TNON now, and I don't want to rehash the whole move, because we already know the headline number is wild. 1094, up basically a double, 14 million shares, 35 times normal volume. The only thing I care about on this 1 minute is that $11 area. See how it's right there, just above the current print. If TNON can actually reclaim 11 and hold it for a few candles, that tells you buyers are still paying up after the first chase. If it keeps wicking into 11 and getting stuffed, that's sellers capping the tape. And with this being a tiny healthcare device name, high dilution risk, recent filings on the board, you've got to respect how fast these can flip. So yeah, TNON, watch 11. Above it, momentum looks cleaner. Now I want to do the Moderna rotation the right way. First, the actual stock, mRNA, not the wrappers. This is the anchor. Board has Moderna at 123.56, up 96%, 18 million shares, about 2.5 times normal volume. So that's not some tiny float weirdness. That's real institutional-sized biotech volume hitting the tape. On the 1 minute, I'm looking for whether it's holding the body of the move or if it's just a giant gap and fade attempt. If mRNA stays firm, then the products tied to it keep getting dragged along. And that's where MRNY comes in. Switching over now. YieldMax mRNA Option Income ETF, $28.99, up 85%, nearly 6 times relative volume. Just remember, MRNY is the follower here. It's not the clean read on Moderna's equity demand. It's a structured income product tied to the mRNA story. So I'd keep the focus on mRNA for the actual signal, and treat MRNY more like the echo on the board. Alright, last pass here. EHGO first, then BIVI, and then we'll flip the board and check the downside names. EHGO sitting 286, up 58%, and this is the classic tiny float momentum look. About a 1.2 million float, 29 million shares traded, relative volume over 33 times. So yeah, there's real tape here, but the line I care about is 250. Above 250, the move still has confirmation. Lose that area, and suddenly it's just another small cap spike, trying not to round trip. Now BIVI, 131, up 36%. Volume's huge versus normal, but it's still under that 140 momentum line. That's the difference. EHGO is holding above its confirmation zone. BIVI still needs to reclaim 140 before I'd call the take truly clean. And remember, both of these have high dilution risk, so don't fall in love with the candle just because it's green. Now downside board. PFSA is ugly, down 41% around $16, but it's trying to stabilize right around that 16 area. If 16 starts holding, fine, you may get a little reclaim attempt. If not, that bounce gets heavy fast. Wedo's the cleaner pressure read. 2420, down 26%, and the danger zones are 23, then 22. If 23 cracks, sellers are still in control. If 22 goes, that's the spot where the chart gets messy. Good mover scan. Big China retail spike, Moderna mania, small cap momentum, and a couple downside traps. Coming up, we'll hand it forward and hit the next live setup. All right, MRVI on the 1 minute. This is the small cap momentum check. And yeah, this thing's got a clean tape. Stocks around 725, up about 16.5%, while IWM is green too. Small caps have a bid this morning. Not a sub-dime lottery ticket, not a tiny float name either. Floats around 123 million, but it is still a fast healthcare mover, so the levels matter. Look at the structure here. Early candles were boring. Little drift from about 5.76 down toward 5.71. Lower lows, nothing exciting. Then it bases around 5.75 and boom. The breakout starts near 5.79, rips through 6, and volume actually shows up. That matters. This wasn't just one random wick. From 6.50 up into 7.25, you get higher highs, higher lows, and repeated volume punches. Right now though, oof, look at that stall. It's sitting right under 7.25, which is basically the day high, and right near the year high area. So here at the markets desk, the clean momentum check is simple. Above 7.25, does it accept and build or does it reject? And if it starts losing 6.50, that's the bigger fail check where the breakout starts looking tired. Quick catalyst check, because with these small cap momentum names, I want to know if there's an actual company story or just tape. I'm not seeing a fresh release from this morning in the data we've got. The visible one is the August 6th Q2 report. Revenue of $51.4 million, net loss of $21.6 million, adjusted EBITDA of $8.7 million, and they raised full-year adjusted EBITDA guidance to $33 to $35 million. Also, Maravai is tied into life science reagents, nucleic acids, mRNA tools, so on a morning where biotech and mRNA-linked names are hot, that connection can get traders sniffing around. Different story than Moderna, but same neighborhood on the tape. Back to the chart. This is where the trap risk lives. The breakout is real in the sense that volume confirmed it. But now it's extended into 7.25 with volume tapering. That's where late chasers can get chopped up. No halt flag in the data I've got, and again it's not some 2-cent delisting risk name, but small cap healthcare can still move violently. For me the scoreboard is 7.25 above for continuation, 6.50 below for the failed breakout look. If it just sits between those, that's not a clean trade read. That's chop. Coming up, we'll flip back to the movers board and see if anything else is taking the baton. All right, markets desk back on the movers board. Green tape, but these names are in their own universe right now. SPY up about 0.5%, QQQ up half, IWM leading near 1%, VIX lower, so this is not a panic tape. But look at the board. MRNX top slot, up 186% at 89.68. YJ still sitting second, up 175, with absolutely wild relative volume. But we already spent real time there, so I'm not going to beat that one to death. RDAC still up 124, TNON up 96, and the actual anchor name, mRNA, still up 93. Scoreboard matters too. EHGO already tagged that 250 trigger we had. RDAC has been fighting that 1350 line, and PFSA reclaimed 15 earlier after getting smashed. So now, we go chart by chart. No wasted motion. First chart is MRNX, pulling up the 1 minute. And yeah, this is the crazy one on the board. But remember what this is. Daily target 2 times long mRNA ETF. It's the wrapper. It's not the biotech itself. Price is 89.68, up 186%. Volume just under 400,000 shares. For the markets desk, the clean line is 90. Super simple. It's sitting right under it. And with leveraged products, that round number magnet can turn into a whip zone fast. If it can't stay above 90, I don't want to pretend the move is clean. That can be pure chase and fade action. If it firms above 90 and the candles stop rejecting, then the tape is saying the mRNA chase is still feeding the ETF side. But oof, leveraged ETF plus a huge gap? That can get nasty fast. Levels first, ego last. YJ now. Just a quick revisit on the 1 minute. I'm not going to retell the whole parabolic story because we already hit it. but the current tape is still wild. Stocks around 480, up about 176%. And the volume number is the headline. 70 million shares versus an average volume around 5,300. That's 13,000 plus times relative volume. Like, that's not normal liquidity. That's a crowd event. So on this chart, I'm watching whether it's still holding higher lows or if these pops are getting sold instantly. When relative volume is this insane, the move can keep whipping, but the air pockets get nasty too. RDAC next. 1 minute chart up now. This one has that SPAC/shell company squeeze feel to it. Rising dragon acquisition, financial services, shell companies, tiny-ish float listed around 4.3 million, and it's doing almost 6 million shares today. So yeah, that's enough volume to make it move, but it's also the kind of name where the levels matter more than the story. The battle here is 1350. If buyers can reclaim 1350 cleanly and actually hold above it, not just wick it and fail, that's the cleaner momentum tell. If it keeps rejecting there, then this becomes more of a squeeze fade structure, where every push is just giving trapped longs a chance to hit bids. Up 125% is a monster move, but the chart has to prove buyers are still in control above that line. TNON, up now on the 1 minute. Tenon medical device name, and this is a nasty little trader stock today. Price is sitting around 10.71, up about 96%, with 14.2 million shares traded, about 35 times normal volume. So yeah, there's real attention here. But this is also high dilution risk, small healthcare, tiny market cap, and that combo can flip on you fast. For me, the clean line on the tape is 10. If it keeps accepting above 10, fine. Momentum traders are still in control. If it loses 10 and can't reclaim, that's where this becomes a trap setup instead of a clean runner. I'm not chasing the green candle here. I just want to see if buyers defend that big round number when it gets tested. Now flip to mRNA, because this is the real anchor for all those mRNA-linked products we've been seeing on the board. Moderna itself is around $121.79, up 93%, and that's not some tiny float microcap move. That's a roughly $46 billion biotech with 18.7 million shares through the tape. Relative volume is only about 2.6 times, which sounds tame compared with the small cap insanity, but on a mega biotech, that's still a big move. Now MRNY is the follower here. Let me pull that up. YieldMax's mRNA option income ETF, up 82%, around 28.46, almost a million shares. Relative volume near 5.9. So when you're sorting the board, this matters. mRNA is the actual driver. mRNY is the product reacting to the underlying and its option structure. If mRNA stalls, these products can lose that clean follow-through really quickly. So I'm treating the common stock as the tell, not the ETF as the leader. Alright, last lap on the board here. EHGO first, because that 2.50 area we flagged earlier did get taken out. And now the 1 minute is trying to see if it can actually hold the higher zone instead of just doing the classic low float spike and fade. This is EHGO. Tiny float around 1.2 million, high dilution risk showing, but the tape is real today. About 31.8 million shares and up roughly 61%. Now BIVI, this is still the cleaner one for me structurally if it can get above 1.40 and stay there. It's at 1.32, up about 37%, but the relative volume is the headline, 140 times normal volume. Under 1.40, it's still chop. Above 1.40, that's the confirmation zone we keep on the board. Quick check on VRAX2, healthcare follow-through, up around 40%, but only 1.37 relative volume, so I'm treating that more like a continuation watch, not the same insanity as YJ or BIVI. And then PFSA on the red side, down 38%, sitting around $17, high dilution risk, tiny float, and for now this is more about whether the selling stabilizes than trying to call a bottom. Green tape overall, small cap still noisy, but that's the movers board. Coming up, let's flip into the next desk and hit the bigger story driving the tape.
All right, quick tool hit while the pre-market tape is still hot. Everything the markets desk is using right here is ProTerminal. This is the movers board. Super simple. Top gainers, top losers, price, percent move, relative volume, the stuff that tells you where attention is right now. Not a buy signal, never that. It's a starting point. Like, if something's up huge, while SPY is only up about 0.5% and VIX is lower, I want to know, is it real volume? Is it a headline? Is it a tiny float? Or is it just a pre-market trap? That's the job of the board. Find the smoke, then go check the fire. Then we go risk check. This is the part a lot of people skip. And oof, that's where small caps can hurt you. Dilution center first. Shelves, ATMs, offerings. The stuff that can change the supply picture fast. Then I'll pull up an actual stock profile and hit filings. Because if a name is running, I want to know what the company recently told the SEC. After that, insider trades. Not magic, not a signal by itself, but context. Who's filing, what's fresh, what's stale. Data can be incomplete or delayed, so you still verify, but this keeps the workflow tight.
Thanks, Markets Desk. Quick market minute for anyone just joining. It's 9:06 a.m. Eastern. We're still pre-market, and the tape is green, but not exactly confetti cannon green. SPY's at 770.3, up 0.37%. QQQ's 720.5, up 0.41. Small caps are actually leading here. IWM 302.5, up 0.74. VIX is down about 1% at 19.44, so the risk thermostat has cooled a little. But breadth is mixed, and that matters. The index level looks fine. Underneath the hood, it's still a bit of a junk drawer. The macro story is pretty clean this morning. Bond ETFs are catching a bid, dollar is softer, and that gives equities a little oxygen. TLT's up 1.37% at 82.78. IEF up 0.34 at 93.25, and the dollar proxy is down 0.43 at 28.02. That's the growth stock-friendly cocktail. Lower rate pressure, weaker dollar, risk can breathe. But it's not pure risk on. Gold is up 1.58% to 404.84. Yen's up 0.85. Oil is basically flat at 130.64, and crypto-linked names are firm, with Coin up 1.14 and MSTR up almost 2%. So yeah, risk on, but wearing a helmet. Big stories driving the day. FOMC minutes hit at 6 p.m. Eastern. No Fed crystal ball from the macro desk. Just watch the reaction. And the Moderna-Merck vaccine headline is still lighting up healthcare and biotech. Coming up, we've got another market movers scan, then a macro data beat, and my quick watchboard is CQQQ holding that 720 area, VIX versus 20, and oil into the EIA inventory print at 230.
Thanks, Macro Desk. All right, Markets Desk is back on the movers board. And look at this board. SPY's green, QQQ's green, IWM's actually leading up about 3/4. VIX is lower, so yeah, risk appetite is there. But breadth is still mixed, so I don't want lazy chasing. I want volume, clean levels, and names that keep bidding after the first flush. Top line, YJ up 177%, monster volume, 72 million shares versus an average around 5,000. That's insane. MRNX is right behind it, up 172%, but remember that's the leveraged mRNA wrapper. RDAC, TNON, mRNA, mRNY, EHGO, all green heat. PFSA is the ugly red one on the board, and MSS is sneaking in late with a 37% push. So here at the Markets Desk, we're going chart by chart. First chart is YJ. We've already seen this name on the board, so no full history lesson, just the live score. Price is 4.82, up 177%, and the volume number is the whole story. 72.6 million shares traded against a normal average around 5,300. That is not normal liquidity. That's a stampede. The clean line above is $5, not a target, just the obvious round number battle everyone can see. If it accepts above 5 and holds there, fine. That tells you the chase is still active. If it starts losing 4.50 after this kind of relative volume blowout, oof, that's where momentum can disappear fast. Also, medium dilution risk is tagged on this one, so I'm reading tape here, not falling in love with the story. MRNX is the weird one on the board, right? Don't treat this like a normal single-name biotech. This is the daily target 2x long mRNA ETF wrapper. So the whole thing is basically a leveraged echo of Moderna's move. It's sitting around $85, up about 172%, but the scoreboard level from earlier is still 90. That's the line I care about. If this thing can't reclaim 90 and actually hold it on the 1 minute, then it's just tracking the underlying spike with extra heat. And with these leveraged products, when the underlying chills out, the wrapper can get sloppy fast. So yeah, big percentage move, but I'm not giving it the same credit I give the actual catalyst name. Now, RDAC. This is where I want everybody to slow down a little bit. Price is $13.76, up 135%, almost 6 million shares traded, and the relative volume is huge, about 138 times normal. But it's also a shell company name, small float, high dilution risk, so these can look amazing for about 10 minutes and then just air pocket on you. The level we were watching was $13.50. It hit, and now the question is super simple. Does $13.50 turn into support, or was that just the squeeze high area before the fade starts? Above $13.50, the tape still has some control. Below it, especially if volume dries up, that's where I'd start calling it a squeeze fade instead of clean momentum. TNON is next, and yeah, this one's got the headline move, but it also has the small cap medical device baggage with it. We're at 11.89, up about 118%, nearly 14.8 million shares traded, 36 times normal volume, so the tape is very real. But the dilution profile is high, and that matters on these runners because supply can show up fast. The level I still care about is 10. That's the trap line. If this thing is holding above 10, fine. Momentum traders can keep arguing it's still alive. If it starts losing 10 and can't reclaim it, that's where the whole chase can turn into air pocket city. So I'm not chasing the headline percentage here. I'm watching whether buyers defend that round number level on the 1 minute. Now here's the cleaner read in biotech. mRNA is the anchor. This is not some random tiny float name. Moderna's a real large-cap biotech, and it's up almost 90% on 19.5 million shares, with relative volume around 2.7 times normal. So when you see mRNX and mRNY exploding behind it, don't reverse the order in your head. mRNA is the dog, the funds are the tail. On the mRNA chart, I want to see if 120 becomes the fight. It's basically sitting right under there at 119.57. And with QQQ green and IWM strong, the backdrop isn't fighting it today. But after a move this violent, the candle quality matters more than the headline percentage. Does it base? Does volume support the next push? Or does it just wick and fade? Okay, now flip to mRNY. This is the YieldMax mRNA Income ETF, up about 80% on just under 1 million shares, relative volume over 6. It's reacting to the mRNA move, but it's a different product. So I'd treat mRNY as the echo, not the source. If mRNA stalls, these derivative ETF moves can get sloppy really fast. Alright, rapid fire finish here. EHGO first. And this is the one we flagged earlier around that 250 area. It's sitting at 2.81 now, up 55%, with 35.9 million shares traded and 40 times relative volume. So yeah, the tape is still awake. But with a 1.2 million float and high dilution risk, I don't want to over-celebrate it. Above 250 is the line that keeps the momentum story alive. Below that, and it starts looking like a crowded small cap fade. Now BIVI, same idea, different chart. It's at 1.34, up 39%, and the volume is wild versus normal, about 142 times relative volume. That 1.40 area is the confirmation spot for me. If it can't actually reclaim that cleanly, it's just churn under resistance. PFSA on the other side of the board is the loser, down about 39% at 1677. Tiny float, high dilution risk, and relative volume showing basically nothing regular session yet. So I'm watching for stabilization, not hero calls. If 1650 starts giving way, that downside pressure can stay sloppy. And then MSS to close it out. Grocery store small cap, 215, up 37%, 10.7 million shares traded, 17 times relative volume. Fresh volume, small float, high dilution risk. That's a trader tape, not a sleepy investment story. For MSS, I'd keep the $2 hold on the radar and then see if it can build above 2.20 instead of just wicking into sellers. Nice movers board today, with IWM leading the indices. Coming up next, let's jump off the board and hit the next desk read.
Thanks, Markets Desk. Quick macro beat while the small caps catch their breath. Here at the macro desk, the story is not complicated, but it is a little weird, which is usually where macro lives. SPY is sitting around 770.57, up 0.4. QQQ around 720.87, up about 0.5%. And IWM is leading at 302.54, up 0.77%. So yeah, the equity tape is risk on. VIX is down at 19.40, off 1.26%, so the risk thermostat is cooling a bit. But breadth is still mixed, and that matters. This is not one of those clean everything green high-five the screen mornings. It's more like stocks are happy, bonds are bid, the dollar is softer, and the hedges are not being thrown in the trash. That's the macro cocktail right now. Risk appetite, but nobody has fully left the bunker. The tell outside equities is the bond and dollar combo. TLT is up 1.37% at 82.78. IEF is up 0.34% at 93.25. So duration has a bid across the curve proxies. That gives growth stocks a little more oxygen. Lower rate pressure is like opening a window in a room full of mega cap tech. At the same time, UUP, the dollar proxy, is down 0.43% to 28.02, and FXY, the yen proxy, is up 0.85% to 57.97. Even if you only trade US stocks, keep one eye on that dollar-yen axis, because when the dollar backs off, it can grease the wheels for tech, gold, and crypto. And look at gold. GLD is up 1.58% around 404.84. That's the funny part. Gold is not acting like everyone suddenly forgot risk exists. It's acting like the market wants the rally, but still wants a helmet. Very adult of it. Watch that UUP 28 line and the GLD 405 area. Those are the little macro tripwires on this tape. All right, breaking news first. Moderna is exploding pre-market after positive late-stage cancer vaccine trial results. ProTerminal's newsroom is tracking Moderna shares up massively. The headline move was around 85%. And the live movers tape has had it pushing closer to the 90% plus zone near 122. What happened? Moderna says its mRNA vaccine, used with Merck's Keytruda immunotherapy, showed success in a late-stage skin cancer trial. Why it matters? This is the market repricing Moderna as more than a post-COVID vaccine story, potentially a real oncology platform story. What we do not know yet, the full regulatory path, the ultimate label, the commercial economics, and whether follow-up data keeps supporting the excitement. So yeah, huge move, but here at the macro desk we still separate breakthrough data from instant business model transformation. The market is excited, the scoreboard is not a medical journal. Next headline, Apple is becoming the capital allocation blueprint for SK Hynix's AI cash mountain. The desk is seeing the same basic playbook investors loved at Apple. Keep funding growth, but also keep proving discipline with cash returns. Why it matters. AI semis are minting cash right now, but the market does not just reward AI slapped on the box anymore. It wants the boring adult stuff too. Margins, cash flow, buybacks, dividends, balance sheet discipline. Very rude of investors to ask for profits after a $1 trillion theme, but here we are. Apple sits in the middle of that story because it trained the market to pay up for scale plus consistency. Third one, Microsoft AI's chief marketing officer is leaving as the company rethinks consumer AI marketing. What happened is straightforward, a leadership change inside the AI division, while Microsoft adjusts how it positions consumer AI products. Why it matters for investors. Microsoft's AI trade has been anchored by enterprise adoption, cloud pull-through, and efficiency gains, not just flashy consumer demos. So a marketing reset is worth watching because it tells you where the company thinks the next adoption battle is. With QQQ up about 0.5% pre-market, the tape is giving mega cap tech room to digest it for now. Coming up, we'll roll this into the market overview and see whether the broader tape agrees with the headlines.
Thanks, Macro Desk. All right, Markets Desk is back on the movers board. And yeah, this board is still spicy. SPY and QQQ are green by about 0.5%. IWM's leading, VIX is lower, so the risk bid is there. but these single names are in their own universe. YJ is still the top monster, 559, up 221%, 77.9 million shares, relative volume over 14,000 times. That's not a typo. MRNX is next. The mRNA-linked leveraged wrapper up 182. RDAC still up 135. TNON up 116. Then the actual anchor, mRNA, up 91. So the board is basically split into two lanes. Insane small cap squeeze stuff and the Moderna sympathy complex. We're not marrying any of these. We're checking the tape, levels, volume, and where the bid starts to slip. YJ first. Not going to rehash the whole story. This is a tape check. The stock's at 559, up 221%, and the volume is just absurd versus its normal day, 77 million shares against an average around 5,300. Oof. That's the kind of relative volume print that can keep shorts uncomfortable, but it's also exactly where chase entries get wrecked. Here at the markets desk, I care about two lines now, $5 for acceptance, $4.50 for failure. If this thing keeps building above 5, the bid is still showing up. If it loses $4.50, that's where the move can turn from clean momentum into air pocket mode. Medium dilution risk is on the profile too, so don't treat a 200% small cap gap like some calm blue chip chart. It's fast, it's thin feeling, and if that $5 area stops holding, I'm not arguing with the tape.
Thanks, markets desk. All right, bell's getting close, so let's zoom out for the opening countdown. Here at the macro desk, the tape is green, but it's not exactly a carefree beach day. SPY's around 770.85, up 0.44%. QQQ's near 721, up about 0.5%. And the Russell's the loud one, IWM at 302.8, up 0.86%. That small cap bid matters, because when the little guys lead into the open, it usually says conditions are getting a little less hostile. VIX is down at 19.35. Off 1.5%. So the fear gauge is cooling, but it's still not asleep. And the cross-asset story is the real tell. TLT is up 1.49%. IEF at 0.47%. The dollar proxy is down at 27.96. And yen strength is showing up too, with the yen proxy up 0.8%. So the basic chain is pretty clean. Softer dollar, bonds bid, volatility easing. That gives growth and small caps some oxygen. But gold's up 2.61% at 408.95, so the market's still wearing a helmet while it jogs. Very stylish, very nervous. Okay, into the open. Today's session is about whether this risk bid can survive first real liquidity, not just pre-market enthusiasm. Oil's basically flat here. USO proxy at 130.89, up 0.18%, so energy isn't screening right now. But EIA crude and gasoline inventories hit at 2:30 Eastern, and that can still move the inflation conversation later. FOMC minutes are at 6 p.m., so no, we're not pretending to know the Fed's next move from a pre-market candle. That's how you end up yelling at a dot plot like it owes you money. Crypto's worn with the softer dollar. BITO 8.77, Coin 147.99, MSTR 94.36, all green. But crypto is still crypto, volatile, lightly regulated, and occasionally allergic to seatbelts. Names to watch at the cash open: the Moderna complex, because healthcare has the headline magnet, and the small cap squeeze crowd around YJ and EHGO, because that's where the pre-market fireworks are. My level board into the bell. QQQ needs to respect that 721.87 pre-market high area. UUP below 28 keeps the dollar tailwind alive. GLD above 405 says the hedge bid is still real. And VIX under 19.35 keeps the open calmer. Bells close now. First prints matter more than opinions. All right. Quick, wide-angle check from the macro desk. This tape is green, but it's wearing a helmet. SPY's sitting around 771.04, up 0.47%. QQQ's 721.43, up 0.55%. And IWM is the tell for me. 302.87, up 0.88%, so small caps are leading the board. That usually means the market's saying, okay, Financing conditions don't feel terrible this morning. But Brent is still mixed. And VIX is only down about 1.6% to 19.34. So this is not champagne at 9:23 risk on. It's more like everybody came to the party but kept their sneakers on. The chain is pretty clean. Softer dollar, bonds bid, vol lower, equities bid. That helps duration-heavy growth, helps the speculative pockets, and takes pressure off the Russell end of the pool.
Thanks, Macro Desk. Quick stock whisperer check on the paper book. This is the show's simulated paper trading portfolio, and the BAYL move did what we wanted pre-open. We were short from 992, BAYL sitting around 912 on the screen, so roughly 8% in our favor. I just covered 150 shares into that weakness. Not trying to be a hero before the regular session volatility hits. The key point, when a short pays you before the bell, you can reduce exposure and make the next decision clear. We still have 150 shares short showing here, with about $120 of open unrealized profit on the remaining piece. Now the bracket matters. For the remaining BALY short, the stop is sitting at 930. That's the line where I don't want to let a pre-market winner turn sloppy. The take profit order is down at 865, and I'm also watching 880 as the next breakdown zone where we'd reassess if sellers stay in control. Bigger picture, I'm not adding just because it's green on the P&L. The thesis is level first. On the watchboard, mRNA above 122.50 is still the post-catalyst strength check, and NVDA above 223 is the liquid AI trigger if the risk on tape keeps holding. Coming up, we'll kick it back to the movers scan.
Thanks, Stock Whisperer. All right, Markets Desk has the movers board up. And look, the tape is green, but it's not some clean everything rips tape. SPY up about 0.5%, QQQ up a little more, IWM leading near 0.8, VIX under 19.4. So yeah, small cap momentum has oxygen. But Brent is mixed, so we're not just smashing buttons on green percentages. Top of the board is still YJ, absolute chaos volume. MRNX is the leveraged Moderna wrapper, so I'm treating that as derivative heat, not a standalone company read. RDAC still has that shell squeeze look. TNON has real volume behind it. And mRNA itself, that's the big cap biotech engine underneath half this board. We're going chart by chart. First one has to be YJ. Okay, pull up YJ on the 1 minute. This is the one everybody's staring at, because the move is just ridiculous. Price sitting around 597, up over 200%. Volume over 82 million shares against basically no normal average volume. That YJ over 5 call out hit earlier. Scoreboard gets one there, but I'm not living in the old level now. The clean line is the $6 handle. If it can actually accept above 6, and I mean hold it, not wick through and puke, then the momentum crowd stays interested. But oof, with this kind of move, failed breaks matter. Under 550, I'd say the character changes fast, and this becomes trap watch instead of clean continuation watch. Also, keep the risk lens on. Tiny market cap, China e-commerce name, medium dilution risk on the board. Fun chart, violent chart, not something to treat casually. Now, mRNX. This is the leveraged mRNA wrapper, so don't treat this like a normal single-name biotech chart. Around $87, up 178%. Volume a little over 437,000. And the whole point here is it's amplifying the Moderna move. The line I care about is still 86. We don't need to redo the whole mRNA catalyst here, just watch the heat. If mRNX keeps holding above 86, buyers are still willing to pay up for the levered exposure. If it starts slipping under 86 and can't reclaim, that's the first real sign the ETF side is cooling, while people back away from the most juiced-up version of the trade. Flip RDAC next, because this one is a totally different animal. Shell company squeeze check. Price is sitting about $13.66, up 133%, and that's on 6.1 million shares with roughly 140 times relative volume. Float's just about 4.26 million. So yeah, it can move fast, but that also means the bids can disappear fast. The spot I'm watching is 13.50. Not because it's magic, because if the bid quality keeps showing up there, shorts and late feints have a problem. But if 1350 starts slipping, especially with those quick red 1 minute candles, That's where the squeeze can turn into air pockets really fast. And with high dilution risk on the board, I'm not chasing the story blindly here. I'm reading the tape. TNON next. And this is where I slow down a little bit, because yeah, it's up a ton. But this is a medical device small cap with high dilution risk on the board. Price is right around $11.53, up about 112%, and the volume is real. 15.4 million shares already versus about 400K average. So the tape is active, no question. But the level is super clean for me. 1150 is basically the decision line right now. If this keeps accepting above 1150, then traders are going to keep staring at that 12 area as the next momentum check. If 1150 starts rejecting and candles keep closing back under it, that's where this can turn from breakout looking to trap looking really fast. Small cap medical device names can move, but with high dilution risk, you don't marry the green candle. You watch whether volume keeps confirming. Now go to mRNA, because this is the real engine behind those wrapper moves we just saw. Moderna is not some tiny float squeeze. This is a $48 billion biotech, and it's still up around 92%, with 21.4 million shares traded. Relative volume's about 2.9, so it's elevated, but it's not the same cartoon number as YJ or EHGO. That matters. On the 1 minute, I'm watching whether this is still building higher lows or whether it starts going sideways after that huge repricing. And now, quick flip to MRNY. This one is the YieldMax mRNA Income ETF, so it's not the same thing as owning the underlying biotech story. It's up about 82% with just over 1 million shares traded. Relative volume near 6.8. Nice move, but again, that's derivative exposure around mRNA, so I'd read MRNY through the mRNA tape first. All right, last little rotation here, hit EHGO first. This was the cleaner prior momentum hit versus some of the slower names on the board. 2.76-ish, up about 52%. And the big thing is the volume. 38 million shares, roughly 43 times normal, on a name showing only about a 1.2 million float. So yeah, that's why it can move like this. But same small cap rule. If it loses the area where volume came in, these can go from clean to nasty real fast, and the dilution tag is high. So don't treat the percentage gain like it's the whole story. Now flip Femi, totally different read. It's green, around 3.07, up almost 40%, but relative volume is basically normal, about 1 times average, and the float is way bigger. So compared to EHGO, this is less of that air pocket low float squeeze profile, and more of a healthcare name just catching a bid. Quick red board check. PFSA at 1670 is still down about 39%, and the relative volume is tiny versus its usual monster average. So this is stabilization watch, not momentum chase tape. Then BIVI, biotech momentum check. 130, up 35%, 15 million shares, almost 147 times average volume. That's the kind of board read I respect, but it's still biotech, low-priced, high dilution risk, so levels matter more than opinions. Good movers scan. Green indices mixed under the hood and small cap heat everywhere. Coming up, we'll shift from the board into the next story set and see what news is actually backing these moves.
All right, quick tool break. Here's the ProTerminal workflow we're using right now before the bell. This movers board is where the market's desk lives. Top gainers, losers, price, relative volume, market cap, all in one shot. And look, this is not a buy signal board. It's a research board. Green row means, okay, something's moving. Now the job is, why is it moving? How much volume is real? And does the chart back it up? Then, boom. One click into the 1-minute terminal chart. This is the part I care about. Candles, wicks, volume bursts, where the bid actually showed up. Oof, if a runner spikes and immediately leaves a nasty upper wick, you see that fast. If it holds a level, builds higher lows, and volume comes in again, you see that too. Same tape we've been reading all morning, just clean and fast. Now here's the risk side. And this is huge for small caps. The dilution center. Offerings, shelf registrations, ATMs. That stuff matters. A chart can look electric for 10 minutes, and then a filing changes the whole risk profile. So yeah, we'll get excited about volume here at the markets desk, but we still check the paper trail. Data can be incomplete or delayed, and none of this is a magic answer. It's research. It's context. It keeps you from trading blind.
Thanks, Markets Desk. All right, cash market is open, and the first 5 minutes are giving us a very tradable little mood swing here. SPY sitting around 770.12, up about 35 basis points. QQQ's around 720.19, up 37. But look at the Russell. IWM 302.45, up 74 basis points. That's the interesting part. Small caps are the kid at the wedding who got to the dance floor first. VIX is lower, at 1936, down about 1.5%. So the fear gauge is not screaming at the open. Breadth is still mixed though, so don't confuse green index prints with everything working under the hood. Out of the gate, your first fire names are wild. YJ up about 173%, Mernex up 172%, RDAC up 150%, TNON up 121%, and Moderna still up nearly 87%, around 117.69. So yeah, risk appetite is awake, but it's awake in the speculative aisle first. All right, breaking news on the biotech tape right now. Moderna is exploding after a phase 3 melanoma trial update. ProTerminal's newsroom is tracking Moderna up almost 93%, with Merck up about 7%, after the company said their personalized melanoma therapy met the primary goal in a phase 3 trial. That's the fact set. Trial met the primary endpoint. The market is instantly repricing Moderna as more than just the old vaccine cycle story, and the move is massive. mRNA's been trading around 120.81 on the movers board, while the broader tape is only modestly green. So yeah, market's up a bit. This thing brought a rocket launcher. Now, here's the macro desk translation. This matters because cancer immunotherapy is the kind of story that can change the revenue conversation for a biotech. But it does not mean the whole commercial path is solved today. What we know is primary goal success. What we don't know yet is the regulatory timeline, the review path, and how adoption ultimately looks if it gets that far. That distinction matters. The tape is willing to pay up for breakthrough potential this morning, helped by a friendlier backdrop. VIX around 1938, dollar proxy still under that 28 area we've been watching. But biotech can still turn into a paperwork marathon after the champagne. Also keep an eye on that existing mRNA 122.50 strength confirmation level from earlier. Above that, the tape is saying buyers are still accepting the new range, not just chasing the headline spike. Second brief. Tenon Medical announced a 1-for-35 reverse stock split. That's a mechanical share consolidation. Fewer shares outstanding, higher per share price. Same pizza, just cut into fewer slices. Why it matters today is Tenon was already one of the wild movers. Last shown around $12.79 and up more than 130%. So traders are going to mix the split mechanics with the momentum tape. Just be careful reading too much into the split itself. Reverse splits can help with listing profile or price optics, but they don't magically change the underlying business fundamentals. Coming up, we'll swing back into the market overview and see if this biotech bid is actually spreading, or if it's just Moderna stealing the microphone.
Thanks, Macro Desk. All right, Markets Desk is jumping straight to the movers board. Green index tape, but mixed breadth, and small caps are still doing most of the yelling. IWM up about 3/4, QQQ barely green. So when this board has MRNX up 178%, YJ up 173%, RDAC up 150%, TNON up 126%, oof, that's not normal market beta. That's event tape, squeeze tape, and some very sketchy liquidity pockets. We're going top down, then charts one by one. MRNX at the top, YJ still ridiculous volume, RDAC is the shell company runner, TNON is still above those decision lines we flagged earlier, and mRNA is the real biotech engine underneath a lot of this. First chart, mRNX. And yeah, this is wild. Up 178% at 87.14, but keep the wrapper hat on. This is the daily target 2x long mRNA ETF, so it's amplified mRNA exposure, not a clean operating company chart. Volume is just under 500,000 shares, so the candles can move hard on not a ton of actual prints. For the markets desk, 87 is the tape check. Above 87, it's still holding near the top of the board, and the bid hasn't fully blinked. Under that, if it can't snap back fast, attention can rotate to mRNA itself or the cleaner high-volume names. No victory lap here. Wrappers can trade nasty, spreads can get goofy, and this is exactly where chasing green candles gets people clipped. Next one is YJ, and this is the first actual single-name squeeze on the board that's got monster tape behind it. We're at about 4.75, up roughly 173%, and the volume number is just stupid. 89 million shares versus an average volume around 5,000. That's not a typo. So the chart question is really simple. After that push toward the mid-5s and the flush off 550, is this building a higher low, or is it just bleeding out while everyone stares at the percentage gain? For me, 4.75 is the little intraday pivot right now. If it keeps accepting above that area, fine, the bids are still there. If that starts slipping and every bounce gets sold under 5, then you know the crowd that bought the breakout is getting trapped. Also, YJ does have dilution data on the board, medium risk. So with a microcap China e-commerce name ripping on 16,000 times relative volume, you respect the move, but you don't treat it like a clean blue chip trend. Now, RDAC. Totally different flavor. This is Rising Dragon Acquisition, so we're in shell company land, and that matters. It's up about 150%, trading around 1462, volume a little over 6.1 million shares, relative volume about 143 times normal, and the float on the board is only around 4.3 million. That's exactly the kind of profile where the headline percentage looks amazing, but the actual tradability can get nasty fast. I'm watching the tape here for bid quality more than the green number. Do pullbacks get absorbed, or do they just air pocket $2 because there's no real liquidity underneath? Around 14 is the sanity check zone for me on this 1 minute. If it's above there and reclaiming quickly, okay, still squeezed. If it loses 14 and can't get back, that 150% headline can fade way faster than people expect. High dilution risk is also on the board, so this is not one to blindly chase just because it's second or third on the scan. TNON's the one I want to recheck because we already had 2 decision lines on this thing, 1150 and then 12. And right now, at 1232, it's technically doing the thing bulls wanted. It's above 12, volume is real, 17.7 million shares, 44 times normal volume. So my first grade is, yeah, that's acceptance above 12 for now. But here's the catch. On these medical device microcap names with high dilution risk, acceptance means candle bodies holding up here, not one nasty wick through 1230 and then a flush back under 12. If it loses 12, now you're back in chop. If it loses 1150, that prior decision line failed and the whole read changes. So clean tape, above 12 and building. Wick trap, back under 12 fast. Now go to the actual engine behind all these mRNA wrappers, Moderna itself. This is the cleanest read in the group because it's not a levered ETF, it's not an option income wrapper, it's the underlying biotech. mRNA at about 119.60, up basically 90%, and the volume is the part that matters, 29 million shares already, versus a little over 7 million average. So yeah, the wrappers can look crazier on percent change. mRNX was insane, but this is where the real liquidity is. If Moderna keeps holding the high end of the intraday range, those products can keep reacting around it. If mRNA starts rejecting and fading, the wrappers usually get sloppy even faster. For me, this one is the anchor chart for the whole Moderna complex today.
Thanks, Markets Desk. All right, quick macro check while the small cap fireworks are still popping. The tape is green, but not exactly marching in formation. SPY's around 769.47, up 0.25%. QQQ is basically flat at 717.8. And IWM is the leader, up about 0.65%. That matters. When the Russell leads while NASDAQ stalls, that's not pure megacap euphoria. That's a little broader risk appetite trying to sneak through the side door. VIX is down to 19.41, off 1.2%, so the risk thermostat is cooling, but it's not exactly beach weather yet. Here at the macro desk, the big tell is bonds. TLT is up 1.28% at 82.705. IEF up 0.39% at 93.295. Lower rate impulse, softer dollar, smaller names catching a bid, that's the morning recipe. The dry joke is, if rates are the bouncer at the growth stock club, today he's at least checking IDs politely. Now the cross-asset part is where this gets interesting. The dollar proxy is sitting at 27.955, down 0.66%. So that UUP 28 line, the macro desk had on the board, is still the pressure valve. Dollar softer usually gives oxygen to gold. And yeah, GLD is at 407.47, up 2.24%. Gold is not acting like the market's totally relaxed. It's acting like somebody still left the geopolitical risk tab open in the browser. Oil is the other one. USO's around 131.13, up 0.36%. Just above that 131 pivot into the 230 EIA crude number, where the estimate is a 0.6 million barrel draw and gasoline is estimated down 1.2. So if oil holds above 131, energy can stay annoying for the inflation narrative. Inflation's the guest who says they're leaving, then asks for one more coffee. Crypto beta is bid too. Coin up 3.51%. MSTR up 3.86%. BITO only up 0.4%. So equity beta is running hotter than the actual Bitcoin proxy. That corner's volatile by nature, but when it firms alongside a softer dollar and lower yields, it tells you risk appetite is still alive. My active levels from here: QQQ 718 as the growth support line, VIX 19.5 as the comfort check, UUP 28 for the dollar, and oil 131 into EIA.
Thanks, Macro Desk. All right, let's hit the movers board. And yeah, this board is still wild. SPY is up 1/3%. QQQ basically flat green. IWM leading almost 0.9%. Breadth mixed. So when you've got names up 100, 200% in that tape, that's not market beta. That's event flow, squeeze flow, low float stuff, and forced attention. RDAC is sitting at the top, up about 210%. mRNX, the levered mRNA wrapper, still up almost 193. YJ is still massive on percentage, but that one has already had some nasty fade action. TNON still on the board after the reverse split move, and mRNA itself, the real liquid biotech name, is still holding a monster gain. So here at the markets desk, we're not just reading green numbers. We're grading control. Who's holding highs, who's losing the bid, and who's just a track with volume. First chart, RDAC. Pull this thing up. This is the board leader. 1813 last print, up roughly 210%. 7.1 million shares already, and that's versus an average volume around 43,000. Oof, that is not normal traffic. That's a crowd showing up all at once. Tiny float, about 4.3 million shares, financial services shell company bucket. And the dilution panel tags this as high risk. So don't treat this like a clean mega cap breakout. On the 1 minute, I'm keeping this super simple. 18 flat is the immediate tape check. If it keeps accepting above 18, the squeeze still has oxygen. If it starts living below 18, momentum gets sloppy fast, and then you look back down toward that prior 14 sanity line we already had on the board. This is tape reading, not a green light. With these shell-style movers, the same float that makes it rip can make the rug pull feel instant. Now, mRNX. This is the leveraged mRNA wrapper, so don't overthink it as its own fundamental story. The only thing I care about here is the tape check we flagged around 87. Last on the board was 91.74, so yeah, for now, it's still above that zone. That matters because if the wrapper starts leaking while mRNA is still firm, that tells you the momentum crowd is backing off. But right now, above 87, it's still behaving like the Moderna chase is alive. I'd still treat this one like a fast instrument though. These levered single-name ETFs can move really ugly when the underlying turns. Flip YJ up next, because this is the one where the chart grade got a little messy. We had 475 as the reclaim area, 550 as the higher momentum zone, and with the board showing 443, that reclaim has not stuck. So the grade here is pretty simple. Huge volume, insane relative volume, but the tape is fading back under the level that should have held if buyers were still in control. 550 is way overhead now, 475 becomes the first real test again. If it can't even reclaim that, This is more of a morning spike unwind than clean continuation. TNON next, and this is the post-reverse split name, so I'm treating it way more carefully than the headline percent move. Last prints around 1110, still up 100%, but the question now is this thing actually stabilizing, or is the first momentum burst just bleeding out? Volume is real, 18.7 million shares, about 46 times normal, but with high dilution risk and a small cap medical device profile, you do not want to confuse volume with safety. For me, the quick line is the $11 area. If it can keep basing around there, okay, that's stabilization. If 11 starts giving way with heavier red candles, then yeah, the momentum is cooling fast. Now flip back to the actual liquid anchor, mRNA. This is the one that matters more than the wrappers, because mRNX and mRNY are basically orbiting this move. Moderna's around 124 now, up about 97%, and the volume is not some tiny stock nonsense. 36 million shares, 5 times normal volume, on a real large-cap biotech tape. That 12,250 spot we flagged earlier is doing its job as the intraday tell. Above it, the move is still being confirmed by volume. Below it, I'd expect the mRNA-linked products to get a lot sloppier. And context matters. QQQ's barely green, SPY's up 1/3%. So a move like this is pure relative strength, not just the market lifting everything. Last fresh one on the green side, pull up MSS. This is Maison Solutions, grocery retailer, tiny float, and yeah, this is the classic small cap momentum profile. Last prints around 293, up about 86%, 21 million shares traded, roughly 34 times relative volume. So the tape is real in the sense that volume absolutely showed up, but the risk box is also real. 2.8 million float, high dilution risk, small cap retail name. For me, the clean line is basically $3. If MSS can hold near VWAP and keep reclaiming 3, momentum traders stay interested. If it starts rejecting 3 and slipping back toward that 270, 260 zone, that's where these can turn into air pockets fast. Now, quick contrast on the red side, PFSA first, down 43%, around 1546, but relative volumes only 0.02 against a monster average volume. So I'm not treating that like the same kind of expanding panic tape unless the chart keeps making fresh lows. With a 600,000 share float and high dilution risk though, below 15 is where I'd say the selling pressure is still in control. And then WETO, this one's more active, down 32%, around 2225, relative volume almost 9 times normal, recent filings, dilution risk marked unknown. That's a different red board feel. If WETO can't reclaim 23, sellers are still leaning on it. If it starts basing above 22, then at least the downside is pausing. So that's the opening drive board. RDAC and the mRNA complex were the wild green side. MSS is the newer low float momentum ad, and PFSA WETO are the loser side checks. All right, let's keep it moving and hand it over to the next hit.
Thanks, Markets Desk. All right, let's shift from pure momentum into an earnings name with gold underneath it. GFI, Goldfields. This is not a tiny low float runner. You're talking about a roughly $38.6 billion gold miner, stock around 43, up about 5.5%, while QQQ is basically flat and SPY is only modestly green. So relative strength matters here. On the 1 minute, look at the shape. Early base around 41.1 to 41.3. Then the bid starts building. Volume wakes up around 4250, and it extends all the way into that 43.76 high. Right now, it's pulling back a bit near 43.4-ish, but it's not some immediate rug. It's digesting after a real expansion move. Here's the earnings setup. And this is where the company desk slows it down a little. GFI is on today's earnings list, but the calendar doesn't give us a clean timestamp. The EPS estimates we have are clustered around 2.71 to 2.75. So the question isn't just, hey, beat or miss. The real question is, does this change the earnings power story? Or does it confirm what the stock has already been pricing in? The last reported Q4 was a monster versus the prior year. Revenue of about $5.29 billion versus $3.08 billion a year earlier. Net income about $2.55 billion versus $856 million. And EPS of 2.85 versus 95 cents. That's huge operating leverage. Margins are the big tell here too. Trailing gross margin around 59%, operating margin around 54%, net margin around 41%. And on the balance sheet, cash was about $1.78 billion against total debt of $3.22 billion, with net debt around $1.44 billion. Free cash flow in that Q4 was about $2.1 billion versus $681 million a year ago. So yeah, this is a real business story, not just a ticker flashing green, but the bar is higher now. Now the catalyst check. I don't see a clean same-day Goldfields press release in the feed here. The tagged press item we have is actually a Westport headline. So I'm not treating that as the reason GFI is moving. That matters. Because when the company newsfeed isn't giving you a fresh smoking gun, the move looks more like a mix of earnings anticipation, the gold miner trade, and the tape already respecting that prior earnings step-up. On filings, you've got recent 6K activity and the annual 20F from late March. Normal foreign issuer paper trail. Not some obvious this morning shock event from what we have on screen. So the skeptical read is, good tape, strong business momentum, but the next actual report has to prove those cash flow and margin numbers weren't just a peak gold snapshot.
Thanks. Company desk. Breaking here from ProTerminal's newsroom. Microsoft says its own AI chips are driving up to 40% efficiency gains compared with leaning on external OpenAI technology. That's the headline, and it matters because AI is turning into a cost of compute arms race. If Microsoft can run more workload on its own silicon, the market reads that as better control over infrastructure costs, less dependence on third-party capacity, and potentially cleaner margins over time. What we do know, the company is talking about efficiency, and the number being put on it is up to 40%. What we do not know yet, the exact deployment scale, how much of Azure AI demand is already running on those chips, and how fast that flows into actual profitability. So the market read is pretty straightforward. This is constructive for the Microsoft AI story, but it's not a victory lap until the cost savings show up in the numbers. With QQQ around 714.88 and still red on the morning. This is the kind of mega cap AI headline that can matter even when the broader growth tape is a little moody. Classic macro desk situation. The robots get cheaper before the humans get lunch. Next headline. Tenon Medical announces a 1-for-35 reverse stock split. We already saw the company desk work through the earnings side, so here's the news brief version. This is a mechanical share consolidation. Fewer shares, higher per share price, same underlying business economics at the moment of the split. Why it matters is perception and market structure. Reverse splits often show up when a company is trying to maintain listing standards or improve how the stock trades on screen. But they can also change liquidity and create some very jumpy post-split price action. TNON is around 1122 on the mover board this morning, so traders are clearly paying attention. But the macro read is simple. A reverse split is not a fundamental upgrade by itself. It's the wrapper changing size, not the candy bar getting more chocolate. And third, Rising Dragon prices a $6 million private placement tied to its business combination process. The structure includes convertible notes and warrants. So the market hears two things at the same time: cash coming in and potential dilution sitting in the background. That's why RDAC can be both a huge momentum name and still a risk management headache. It's around 1881, up big on the board, with small cap risk appetite helped by IWM at 302.42, up about 0.7%. But convertible financing plus warrants means traders need to separate the squeeze tape from the capital structure. Those are not the same animal. Coming up, we've got a quick pre-terminal promo. Then we'll get back into the mover's scan.
Thanks. Macro desk? All right, Markets Desk is back on the mover's board. This is the kind of open where you cannot just stare at SPY. SPY's green, QQQ's red, IWM is leading, breadth is mixed, but the chaos is all in these single names. MRNX still top of board, up about 233% at 104.28. RDAC right behind it, up 222%. And our 18 line is still live there. YJ is still monster volume, but it already tagged those downside levels, so I'm treating that one as guilty until it proves otherwise. Then mRNA itself, up almost 120%. We're not redoing the whole catalyst, we're scoring the tape. Let's chart it, not admire it. First chart is MRNX, straight to the 1 minute. This is a tape red product right now. Board price 104.28, up 233%, about 749,000 shares traded. Oof, when a levered ETF is printing this kind of move while the broader tape is mixed, I only care about control. For me, 100 is the clean line, not magic, just the round number control line. Above it, buyers still have the wheel, and dips can stay orderly. Lose 100 with a heavy red candle, and that chase bid can thin out fast. I'm not calling a trade here, just keeping score. MRNX above 100, momentum still has structure. RDAC next, and this one's still the clean squeeze read. Board print is 1881, up 221%, with 8 million shares already traded and relative volume at 186 times normal. So yeah, this is not some sleepy SPAC tick. The live line is still 18. If it's living above 18 and the dips keep getting bought quickly, the squeeze tape is still intact. But if you start seeing those 1 minute candles wick under 18, reclaim, fail, and then roll back through it again, that's when it gets sloppy fast. Also, just remember what this is. Shell company, tiny float around 4.25 million, high dilution risk on the board. Great for momentum reads, dangerous if you start treating every green candle like it has to keep going. Now YJ, this is the one where we already got the level break, and now it's about scoring the aftermath. Earlier 550 broke, then 475 broke, and the board's sitting around 467 now, so price is under that second line. That changes the tone a bit. If YJ can reclaim 475 and actually hold it, not just tag it for 2 candles and rug, then maybe the dip buyers are trying to stabilize it. But if 475 turns into resistance, that's the classic lower high fade after a monster move. And monster is the right word. 96 million shares traded, relative volume over 18,000 times normal. That's insane turnover. So I'm not calling it dead, but I am saying the character is different under 475 than it was above 550. Now, Moderna itself. This is the cleanest read in the whole mRNA complex, because this is the actual liquid biotech leader, not the wrapper. Board has mRNA at 138.42, up basically 120%, and the key for me is the volume. 46.5 million shares already, about 6.4 times normal. So yeah, it's a monster move, but it's not some tiny name air pocket. This is where the real money is trading. With SPY only up about 1/3% and QQQ actually red, that relative strength is ridiculous. On the 1 minute, I'm not rehashing the catalyst here. I just want to see who controls this 138 area. If buyers keep absorbing dips around the high 130s, the whole board stays hot. If that starts slipping and every pop gets sold, then the MRNX and MRNY stuff can get jumpy really fast. Alright, MRNY now, quick confirmation check. This is the YieldMax mRNA option income ETF, so it's not the same thing as owning Moderna Common, and it's not the same juice profile as MRNX either. Board print here is 32.96, up 111%, volume just under 2 million shares, relative volume a little over 12 times normal. So it is confirming the theme, but look at the ranking. mRNA is the source, MRNX is the leveraged expression, MRNY is participating but not leading. That matters. If Moderna keeps holding firm, MRNY can stay bid with it. But if mRNA loses that control area we just talked about, this is the kind of wrapper where the tape can go from smooth to sloppy in a hurry. Last upside chart here is TNON, straight to the 1 minute. And yeah, this is that 11 line from the open call out. Board print's basically right on it. 1103, up 102%, 20 million shares, 50 times relative volume. So the volume is real, the move is real, but the tape is starting to act more like post-split momentum cooling than clean continuation. Above 11, it can at least stabilize and build a base. If it keeps losing 11 and reclaim attempts get stuffed, that's the lower high fade telling you the crowd is backing off. Now quick lower board speed round. SKK at 660, up 57%. decent strength, but only 1.7 times relative volume. So compared with the chaos up top, this is more controlled, not the same panic chase. MSS is the better pure momentum check. 240, up 53%, 31 million shares, almost 50 times relative volume, tiny float, high dilution risk. That's the kind of 1-minute chart where VWAP matters a lot, because if it loses structure, it can unwind fast. CISS, 413, up 50%, tiny float, but relative volume's basically normal at 0.98, so I'm not treating that like the same broad participation move yet. And then PFSA on the loser side, 1390, down 49%, super thin float, high dilution risk, but volume is only 0.03 relative volume, so that's heavy pressure, but not a high participation washout read. So that's the board. mRNA complex leading, RDAC and YJ still wild, TNON sitting right on the pivot, and the lower board is very split. All right, movers are mapped. We're flipping back into the broader tape and news flow next.
Thanks. Markets desk. All right, quick macro reset, because the tape is doing that thing where it smiles with one side of its face and frowns with the other. SPY is sitting around 770.08, up about 0.34%. But QQQ is down 0.27% at 715.56. So, this is not your classic mega cap tech victory lap. The Russell's the leader here. IWM 302.40 up 0.72%. And that makes sense when you look across the street. TLT is up 1.48%. IEF up 0.39%. The dollar proxy is down 0.75% at 27.93. And VIX is easing to 19.32. That's the chain. Bond prices up, dollar softer, volatility cooler, small caps get a little oxygen. Not champagne oxygen, more like someone finally opened a window. The line I care about on the equity tape is SPY 770. Above it, the morning base still looks constructive. Below it, that early push starts looking more like digestion than momentum. Now here's the part that keeps this from being a clean risk-on postcard. Gold is not backing off. GLD's up 2.54% at 408.69. Oil's still firm at 131.54, up 0.67%. And the yen proxy is actually green too, up 0.71%. So yeah, risk appetite is better, but the market is still carrying an insurance policy in its back pocket. Gold strength plus oil strength says inflation and geopolitical risk have not left the building. They just stepped into the hallway to take a call. Crypto confirms the speculative side is alive. BITL up 0.52%. Coin up 3.43%. MSTR up 4.76%. Even if you only trade U.S. equities, keep one eye on oil. Into the EIA numbers at 2:30. Crude stocks are expected at minus 0.6, gasoline at minus 1.2. Because oil holding north of 131.50 keeps the inflation smoke detector chirping. And later, 6 p.m., FOMC minutes. We're not predicting the Fed here at the macro desk. We're watching how the tape votes after the language hits.
Thanks, Macro Desk. Let's bring it over to the Stock Whisperer Paperbook. Quick reset. This is the show's simulated paper trading account, not something to copy, and I'm starting this check-in flat. No open positions on the sheet right now, which matters because I don't want hidden risk layered into a fresh decision. The tape is mixed. SPY and small caps are green. QQQ is still lagging, so I'm not looking for random beta here. If I'm doing anything, it has to be a catalyst name showing its own demand. Okay. Pull up mRNA. This is the one name I'm willing to act on in the paper book because it's still trading like a real catalyst tape, not just a market drift. Current print is around 143.8. It's up about 128% on the day, and relative volume is running around 7.5 times normal. That is extended, no question. But the important part for me is the structure after the gap. It's not just one vertical candle and a total air pocket. It's holding above 140. And that 140 area is the line I'm using to decide whether momentum still has control. Here's the setup, nice and simple. The thesis is mRNA is still accepting above 140 after the Phase 3 headline, and buyers have not let the morning support shelf completely break. The risk line is not 140 exactly. 140 is my warning light. The actual paper stop is 136.40, tucked below that shelf, so I'm not getting shaken out by one quick wick. The upside bracket is 158.50. So if I'm wrong, the stop defines it. If I'm right, the simulator already has the exit plan. No averaging down, no moving the stop lower just because I want to be right. All right, now we execute it on the paper trader. I'm selecting mRNA, 50 shares, simulated long, market order, with the stop at 136.40 and the take profit at 158.50. Small size on purpose. This is a huge gap name. So the point is not to swing for the fences. The point is to test whether the momentum can keep accepting above the support zone with defined downside. There it is. Fresh simulated mRNA long in the book, 50 shares, with the bracket attached. I'm going to treat the fill as roughly around the current 133 to 144 area, unless the paper blotter shows a little slippage. Using 143.8 as the working mark, that's about 7.40 of risk per share, down to 136.40, and about 14.70 of room, up to 158.50. So roughly a 2-to-1 setup on paper. That's the whole reason I can take it calmly. The loss is defined before the trade is even judged. Now the management plan. If mRNA loses 140 and starts living below it, I'm not going to pretend the thesis is still clean. That's the warning sign that the chase bid is thinning. If it trades down into 136.40, the bracket does its job, and I take the paper loss. On the other side, I'm not tightening anything just because one candle is green. I want either clean continuation toward the 158.50 bracket or controlled consolidation that lets the stop stay where it belongs. The Stock Whisperer book is about process first, P&L second. One more watch before I hand it back. PLTR is on my board only above 172.50, and only if QQQ stops acting heavy. I'm not forcing that trade right now. mRNA is the only live paper action from this session. 50 shares simulated long, stop 136.40, take profit 158.50, and 140 is the support warning light. Coming up, we'll get a quick Pro Terminal tour, and then we're right back into the movers.
Thanks, Stock Whisperer. Quick tool break, because this is the stuff we're using live here at the markets desk. First stop, dilution center. Oof, this matters on small cap runners, shelves, ATMs, offerings. Not a magic red light, not a buy or sell signal, but it tells you what kind of supply risk could be sitting over the tape, especially on a morning where small caps are flying and IWM's green while QQQ's still red. Now, flip to the movers board. This is the heartbeat. Top gainers, losers, price, relative volume, float when it's there. That's how we keep score without guessing. MRNX, RDAC, YJ, mRNA. These aren't recommendations, they're clues. Big difference. The board tells us where attention is. Then the chart tells us whether that attention is real or just one ugly wick and a trap. And then, when a name's moving, we don't just stare at the percent gain. Pull up YJ. We check the company page, hit filings, hit insider trades, hit news. That's the workflow. If there's a recent filing, an offering, a weird corporate action, you want that on the same screen as the move. Data can be incomplete or delayed sometimes, so you still think like a trader. Confirm, compare, don't just react. Last piece, the 1-minute terminal chart. This is where the markets desk lives. You've got the candles, volume, levels, and the tape all in one place. YJ's been one of the wild ones today, so this is exactly why we jump from the board to the chart fast. Where did volume hit? Where did it reject? Where's VWAP? Where are traders trapped? Everything you're seeing, movers, charts, dilution, filings, insider data, that's ProTerminal. If you want to use it yourself, go to proterminal.io. Educational stream, real market data, no hype, just the tools and the levels. Coming up,
we'll get right back into the market mover scan.
All right, Markets Desk is back on the movers board. Let's hit the names actually stealing the tape right now. SPY's green by 0.25%. QQQ's still red. IWM's green, so this is mixed index tape. And then the movers board is just wild. MRNX up 253% at 110.69. RDAC up 198. YJ up 162 with absolutely monster volume. mRNA itself still up 128 and MRNY up 121. So yeah, the mRNA complex is still the headline, but don't ignore RDAC and YJ. Those are the raw small cap chaos names. RDAC is running 214 times relative volume. YJ is showing 19,000 plus relative volume. Ridiculous print. We're not chasing the green. We're checking where the bid is still alive versus where the move is already exhausted. Now MRNX first, because this is the top of the board, and it already hit that earlier breakout level we had on the scorecard. Pulling up the 1 minute. This is not a normal stock read. It's the leveraged mRNA vehicle, so the tape can get nasty fast. Price is 110.69, up 253%. Volume just over 1 million shares. What I care about here is clean structure, not a story. Does it keep accepting above 110, or do the candles start wicking and failing back through it? That's the whole game. If 110 turns into resistance instead of support, momentum usually cools quick on a name like this. If it keeps holding above that area, and VWAP stays underneath it, then the squeeze crowd is still in control. Oof, just respect the speed on this thing. Big green doesn't mean easy green. RDAC next. And this is the cleanest example of why you don't just chase a percentage on the board. Yeah, it's up about 198%, last around 1744, and the volume is ridiculous. 9.2 million shares versus an average around 43,000, so you're talking 214 times relative volume. But this is also a shell company tape with high dilution risk, tiny-ish float data, and that means the candles can get super jumpy. So the bid check for me is simple. Does this keep holding the 17 area, or do sellers start accepting below it? If it keeps snapping back over 17, okay, there's still dip demand. If 17 breaks and can't reclaim, that's where this turns from momentum into air pocket territory real fast. Now YJ, this one is even wilder on the volume side. Up about 162%, last roughly 455, and the board is showing 102 million shares traded. Relative volume is basically cartoonish, 19,000 times normal. So this is not a quiet move. This is the whole scanner piling in. The test here is whether 450 is becoming control, or whether it's just the top of a crowded move. I don't want to overstate it without a clean candle read, but visually on the 1 minute, if this keeps building over 450 and starts pressing higher, that tells you the move is still expanding. If it loses 450 and then can't reclaim, that's the trap signal. Because after 102 million shares, when momentum rolls, there are a lot of late buyers trying to use the same door. Now here's the actual underlying mRNA, and this is why the ETF stuff is going completely nuts. Moderna itself is still up about 128%, around 143.80, with 60 million shares already traded. So yeah, this isn't just some tiny levered product doing weird ETF math. The parent chart is carrying the whole board. What I care about on the 1 minute now is whether buyers keep accepting price up here after the monster move. If this starts holding the 143-144 zone instead of instantly snapping back, that's the tape saying the bid is still real. If it loses that area and volume dries up, then the chasing gets a lot more dangerous. MRNY next, quick follow-through check. Same Moderna ecosystem, but totally different product. This is the YieldMax mRNA Options Income ETF, up about 121%, trading near 34.50, and the volume is over 2.2 million versus about 14 times normal. So the takeaway here is simple. The mRNA move is big enough that all the linked products are lighting up, not just the 2x long ETF we already checked. But again, product structure matters. This is not the same thing as owning the common stock, so I'm reading it as confirmation of theme participation, not as a cleaner chart than mRNA itself. Alright, flipping to TNON, post-split tape update only here. 10 ends up about 117%, around 1183. Volume over 21 million, relative volume 53 times. This one has recent filings and high dilution risk on the board, so I'm not getting cute with it. If the 1 minute keeps reclaiming pops and holding them, momentum traders will notice. If it starts failing every push and living below VWAP, that's the classic small cap fade setup. FEME now. This is the healthcare momentum name sitting up about 48%. Last around 325. And this is where I want to see if the tape can actually control VWAP or if it just turns into a mid-morning fade. 26 million shares already. So there is real attention here, but the dilution tag is high, and on these small healthcare names that matters. If this keeps holding above the 325 area and volume keeps refreshing, okay, momentum is still awake. If it loses VWAP and starts giving back candles fast, that's usually the tell that the chase is getting crowded. Quick loser side check. PFSA is the ugly one, down almost 49% near 14 bucks. Tiny float, high dilution risk, and the volume today is way under its normal monster average. That's pressure, not healthy rotation. SKK is still participating lower on the board, up about 54% around 646. Cleaner than some of the crazier names, but not the same explosive volume story. And MSS, grocery store name believe it or not, up 45% with 58 times relative volume, high dilution risk, low float, so that one can move fast both ways. Alright, that's the movers reset. Coming up, let's flip over and hit the next tape check.
Thanks, Markets Desk. Quick Stock Whisperer paper book check. On the simulated broadcast portfolio, I've got one active position, mRNA, long 35 shares, average 154.26, marked right around 154.20. So basically flat, down about $2, nothing dramatic. The reason I took it is pretty simple. mRNA is holding above that psychological 150 level on exceptional catalyst volume. And with QQQ still red on the tape, that relative strength actually matters. This is the show's paper account, not a copy this setup. For me, the thesis is clean. 150 stays defended, the momentum long is still alive. 150 starts getting offered hard, that's the first warning momentum is fading. Now, the bracket is the whole trade here. The stop is sitting at 143.80, below the latest breakout zone, and the take profit order is up at 174. So before I care about upside, the downside is already defined. I don't want a catalyst chase turning into a hope trade. We've still got about 69.8K in cash, so the size is small by design. Watching next, mRNA either respects 150 and keeps grinding, or it loses that level and I get defensive. PLTR is still just a watch over 172.50 if QQQ stabilizes, no active paper position there. Coming up, we'll kick it right back to the movers board.
Thanks, Stock Whisperer. Let's pull up Google and reset the megacap tape. Daily chart first. This is not a runaway leader right now. Stock's around 343 and change, barely red while QQQ's down about 0.6. So yeah, it's holding up better than the Nasdaq. But the chart is still a base, not a breakout. Big picture, this thing ripped from the low 300s up near 386. Then oof, that breakdown through 350 was nasty. Slammed down toward 317 on huge volume. Since then, sideways. For the markets desk, 340 to 360 is the whole daily map. Here's why that 340 area matters. The recent candles are trying to build a floor around 343 to 346, but they're doing it on lighter volume after the big sell day. That's not automatically bad. It just means the tape is waiting. Price is below the short-term stuff. 20-day around 345.90, 50-day around 352.40. Longer term, it's still above the 200-day, down in the low 332s. So I'm not calling this structurally broken. But momentum? Meh. RSI around 44, ADX around 10, weak trend, choppy tape. Above 360, now you're testing real prior supply. Below 340, the daily base starts losing shape. All right, let's drop down to the 1 minute because this is where the tape actually gets interesting. Google opened around 342.98, slipped toward 340.90, then bang, there's your volume burst. From roughly 342.45 up through 344.30, in a couple candles, with 1 minute doing more than 367,000 shares. That is real participation. But watch the response. Sellers hit it right back down into the 341s and 342s. So this is not a clean trend yet. It's a range. 341.80 on the bottom, 343.80 on the top. Current action is parked right under that 343.80 lid, around 343.75. That's tight. So score it like this. Google is acting a little better than QQQ today, but it has not earned the leadership label yet. Above 343.80 with volume, the 1 minute range finally starts to lean constructive. Below 341.80, that earlier volume spike risks being just a wick trap. And oof, mega cap wick traps can waste your whole morning. With VIX still around 19.4, I don't want to trust the first poke either way. Coming up, we'll jump back into the movers board, because the small cap tape is still moving way faster than mega cap tech. All right, markets desk back on the movers board. Let's see what's actually still moving right now. And yeah, this board is still wild. QQQ's red, IWM's green, breadth is mixed, but look at the top of this thing. MRNX up almost 300%, mRNA up 149%, YJ still up 145%, RDAC right behind it, MRNY, TNON. This is not a normal large cap tape. This is a momentum board. Fast money, thin names, levered products, big gaps. So I'm not treating green as clean. I'm treating green as, okay, where's the volume still defending and where's the first rug pull level? We're going name by name, board first, then 1 minute charts.
Thanks, Markets Desk. Breaking from the ProTerminal newsroom, Apple has hit a $5 trillion market cap as Tim Cook steps down, with this week marking Cook's final earnings call as CEO. What we know, under Cook, Apple's share price is up 2,180%. So this is not exactly a quiet handoff. It's a $5 trillion baton pass, which is a very expensive relay race. What we don't know yet? How the next CEO shifts the growth strategy, if at all, and what the next innovation pipeline looks like after Cook. Market read here at the macro desk, with QQQ sitting around 713.5 and red on the day, while SPY is around 769.3 and slightly green. This is selective mega cap gravity, not a clean everything rips tech tape. Next headline. Microsoft AI's chief marketing officer is leaving as the company rethinks the consumer marketing strategy for AI products. The fact pattern is simple. Leadership change inside the AI division, and the strategy focus may be shifting around how Microsoft talks to consumers versus how it sells into the enterprise stack. Why it matters. Microsoft is one of the market's AI anchors, and when QQQ is already down about 0.6%, investors care less about the slogan and more about whether AI spend turns into durable revenue. The stock doesn't need drama. It needs execution. And the macro wire. The U.S. Treasury is at least doubling buybacks for longer-dated nominal coupon securities. Translation? More activity in the long end of the bond market, at a time when yields are still the thing quietly pulling the strings on equities. You can see the reaction in the proxies. TLT around 82.87, up 1.48%. IEF around 93.29. Dollar proxy near 27.93 and softer. Gold up at 408.69. Oil still firm around 131.54. That's the cross-asset cocktail. Bonds bid, dollar lower, gold bid, oil not exactly helping the inflation mood. Coming up, the options vol beat gets the fun job of putting a price tag on everybody's nerves. Thanks, Markets Desk. Okay, quick vol check, because this tape is doing the classic mixed message routine. VIX is sitting around 19.35, down about 1.5%, and that matters because QQQ is red by roughly 0.5%, while SPY and IWM are green. So yeah, tech is soft, but this is not a panic bid for protection. Here at the macro desk, that reads more like rotation than stress. The line I'm watching is simple. If VIX reclaims 20, the market starts paying up for insurance again. If it slips under 19, that's the opposite. Vol sellers are still leaning on the doorbell and nobody's answering. Dry little macro joke. The VIX under 20 is the market saying, I'm anxious, but I'm not calling my therapist yet. Now let's put the actual event vol firecracker on screen. mRNA. And I'm not talking options chains or strikes here. We don't have that data on this screen, so keep it clean. This is realized volatility. The chart had Moderna opening near 121.93, flushing to about 115.90, then ripping all the way toward 163 on monster volume. We're talking a reversal confirmed by a spike north of 2.4 million shares and repeated million share pushes on the way up. That is the kind of move where options traders stop using adjectives and start checking calculators. Right now, the chart read is stalling in that 159 to 163 zone. Volume still elevated, but tapering a bit. So for the tape, 163 is the high water mark. The existing 150 line from the paper book is still the sanity check underneath. Above 163, the squeeze can keep forcing hedges to adjust. Below 150, that same volatility can flip from chase mode into de-risking mode. All right, quick vol check from the macro desk, because the market's acting calm, but not exactly relaxed. VIX is sitting around 1936, down about 1.5%, so volatility is backing off a touch, but it's not asleep. That 20 line is still the neighborhood watch. Below 20, the tape can breathe. Back above 20, traders start checking the locks again. And look at the split. SPY is green at 770. QQQ is red at 715. IWM is up about 7/10. That's not panic. That's rotation. Big tech is carrying a backpack full of bricks. Small caps are actually getting a bid. And VIX is basically saying, I see it. I'm just not yelling yet. Now let's put the event heat where it belongs. mRNA. And this is why options people care about realized vol, not just the nice clean theory slide. This thing opened around 119, flushed toward 114, then ripped into the 160 area with repeated volume bursts. That is a massive intraday range, nearly $50 from low to high. So even with VIX under 20, single name volatility here is its own weather system. The broader market can be mixed and sleepyish, and mRNA can still trade like somebody turned the biotech blender on without the lid. I don't have the options chain in front of me, so I'm not quoting implied vol or strikes. What we can say from the tape, 163 is the current upside lid from the 1-minute chart, and if it can't keep accepting near those highs, that existing 150 zone becomes the sanity check for whether the event move is still controlled or starting to unwind. Okay. Quick sanity check on the mRNA news page before we leave this vol beat. The clean headline here is FDA approval for the seasonal flu vaccine mFlusiva for adults 50 and older. So yeah, that gives the move an actual catalyst, not just random biotech tape. You've also got a phase 1 Ebola vaccine trial headline from earlier in the week, and the Q2 update in the background with revenue still tiny versus the size of the company and EPS still negative. So this is exactly why the options crowd treats mRNA like an event vol name. Big headline, huge intraday range, volume everywhere, but I don't have the options chain on the screen, so I'm not going to pretend we've got strikes, skew, or implied move data. What we do have is realized volatility screaming off the chart while VIX is under 20, and that's the mismatch. Now layer in FOMC minutes coming up, and the risk is pretty simple. If macro volatility wakes back up, names already stretched on headline momentum can whip around fast. All right, let's hand it back to the movers board next and see what else is actually getting paid today.
Thanks, Macro Desk. All right, let's hit the movers board. Markets Desk is back on the tape, and this board is still absolutely wild. SPY green by a third, IWM leading, QQQ still red, VIX under 20. So this is not clean, broad market strength. This is rotation plus single name chaos. Top of the board, MRNX, the 2x long mRNA ETF, up around 289% at 122. Then TNON up 147%, 24.9 million shares, 62 times relative volume, That's real activity, but also a tiny healthcare name with high dilution risk. mRNA itself is still huge, up 145% on nearly 77 million shares. mRNY is the other mRNA-linked product. And then YJ, 105 million shares, relative volume basically off the planet. So we're not camping on the board. We're going chart by chart. First chart, MRNX, pulling the 1 minute. This is the board leader, but remember what it is. A leveraged mRNA ETF, not the operating company. So the move can look insane because it's built to amplify the underlying. Price is around 122, up almost 289%. Volume 1.33 million. The clean trader question here is super simple. Does this keep accepting above the 120 area, or does it start slipping back under that round number? If 120 breaks cleanly, that tells me the momentum product is losing control and the air pocket risk goes way up. If it keeps holding above there while mRNA stays firm, then the bid is still alive. But yeah, don't confuse this with normal stock behavior. Leveraged ETF tape can get slippery fast, especially after a monster gap. Next one is TNON, and this is a totally different animal than the mRNA ETF stuff. Pulling the 1 minute here. Tenon Medical is up about 147%, trading around 1349, and the volume is nuts. Just under 25 million shares versus a normal day around 400,000. That's 62 times relative volume. So the tape is real, but the structure is where I'm careful. Dilution risk is flagged high. Recent filings are on, market cap is tiny, and you've got that small cap medical device profile where these can move fast both ways. For me, the clean read is the mid-13s. If it keeps holding 1350-ish and keeps printing volume, okay, buyers are still defending the move. If it starts losing 1350 and can't reclaim, that's where this can flip from momentum into churn really quickly. Now, quick underlying check. mRNA itself. I don't want to rehash the catalyst, we already hit that, but this is the anchor for all these linked products. Stocks around 154, up roughly 145% on almost 77 million shares. So yeah, it's still a monster move even with QQQ a little red on the day. The level is simple. Did 150 hold? So far, based on the board price, it's above it. If the 1 minute keeps respecting that 150 area, then that prior 163 upside callout is back in play on the screen. If 150 starts cracking, then I'd expect the ETF follow-through to get a lot messier too. MRNY now. And this is the other mRNA-linked product on the board. Pulling the 1 minute here. Different structure than that 2x long ETF we just looked at. Right? This is the YieldMax mRNA Option Income ETF. So I'm not expecting it to move 1-for-1 with mRNA. But look, it's still up about 137%, around $37, and it's doing 2.6 million shares versus roughly 16 times normal volume. So the read is simple. If mRNA keeps holding bid and mRNY starts stalling at this 37 area, that's your lag tail. If it stays above 37 and keeps trading with real prints, then the sympathy follow-through is still alive. Just don't confuse the ETF wrapper with the underlying biotech. Totally different mechanics. Now, YJ. This one is pure tape craziness. 1 minute chart coming up, and the headline number is wild. 105 million shares traded on a stock that normally does about 5,000 shares. That relative volume number is basically off the planet. Almost 20,000 times average. So the question is not, is there attention? Yeah, obviously. The question is whether the liquidity is real demand or just churn around $4. Price is sitting right around 405, up about 133%. Market cap only about 22 million. Dilution risk marked medium. So I'd keep the $4 area front and center. Above 4, it's still absorbing that monster volume. Lose 4 and fail to reclaim it, and this can turn into one of those high-volume trap tapes where everybody's busy, but nobody's really in control. All right, last speed round here. RDAC first, then SKK, then I want to clean up the weak side. RDAC is the classic SPAC/shell company momentum look. Up about 120%, almost 9.7 million shares, and that relative volume is gigantic, 224 times normal. So on this one, I'm not treating it like a clean operating company breakout. I'm treating it like a tape event. Watch how it behaves around that $13 area. If it can't keep reclaiming and holding above 13, these SPAC momentum names can round trip really fast. SKK is different. Still a big move, up 85%, but relative volume is only about 3 times, not 200 times. Industrial's name, engineering and construction, so this is not the same nuclear volume squeeze profile as RDAC. Now flipping to the downside. PFSA is ugly, down 53%, and the volume is actually way under its average today. That looks more like an air pocket after prior action than broad panic. Wedo, down 43%, has real relative volume, about 12 times, so that one's selling is more active. And BIVI is still green, up 41%, but it's a high dilution risk biotech with 236 times relative volume, so I'm putting it in the speculative bucket with the rest of these. Big takeaway, the small cap tape is still alive, but it's getting very two-sided. Huge rips, huge dumps, and not a lot of forgiveness if volume dries up. Coming up, we'll shift off the board and hit the next desk read from here.
All right, quick tool check. This whole tape board we're flying around on is ProTerminal. This is the movers board. Gainers, losers, price, relative volume, the stuff the market's desk needs fast. Not a buy list. Big difference. It's a triage screen. Who's moving? How hard? And is there actual volume behind it? Now this is the part people skip. And oof, that's where they get smoked on small caps. Dilution. ProTerminal has the dilution center, so you can check shelf registrations, ATMs, offering risk, basically where surprise supply can come from. It doesn't tell you the future, nothing does. But it gives you context before you start cheering a green candle like it owes you money. Let's use YJ as the example, because it's been active on the board. Pull the profile, hit filings first, that's where you want to see what the company has actually put in writing. Then news, same spot, so you're not guessing at the catalyst. And then insider trades. Again, not a magic signal, not some secret cheat code, but it's clean research context in one place instead of 10 browser tabs and a headache. And this is where the market's desk lives. The 1-minute terminal chart. Candles, volume, levels, the whole fight between buyers and sellers right in front of you. Use the data to ask better questions. Data can update. Stuff can be incomplete at the edges. And this stream is educational. But if you want the same screens we're using live, it's ProTerminal. Sign up at proterminal.io. Coming up, we jump right back into the mover scan.
All right, back to the movers board, market's desk speed run. And yeah, this board is still wild. The tape underneath is mixed. SPY green, IWM leading, QQQ a little red, VIX still under 20. So small cap and event vol appetite is clearly alive, but it's not a clean everything rips market. Top of the board, MRNX, the 2x long mRNA ETF, up about 282% around 119.60. Then TNON, medical device name, up 185% with almost 27.3 million shares traded and roughly 68 times relative volume. mRNA itself is still massive, up 140%, 82 million shares. Then YJ, oof, look at that volume number, 106 million shares, over 20,000 times relative volume. RDAC right behind it, shell company SPAC style heat, up 132 with 237 times relative volume. So the theme is simple. Biotech event vol, leveraged ETF spillover, and speculative small cap momentum all hitting at once. Let's pull MRNX first, because this is the craziest expression on the board. Remember, this is not the common stock. It's a daily target 2 times long mRNA ETF, so the move is designed to be amplified off the underlying. Price is around 119.60, up about 282%. Volume just over 1.4 million. The big thing here is that 120 area we flagged earlier. It's not theory anymore, it's the whole fight. Sitting just under it by a hair. If buyers keep reclaiming that zone, the tape is still trying to stay alive. If it keeps rejecting under 120, that tells me the leverage chase is cooling even while mRNA itself is still green huge. And with these leveraged single name ETFs, you've got to respect the structure. They can move fast both ways, especially when the underlying is already trading like an event vol monster. TNON next, and this one is the classic small cap heat check. You've got 10 and up about 185%, 27 million shares already, basically 68 times normal volume. So the tape is real in terms of liquidity, but the risk box is also loud. High dilution risk, healthcare device name, and this is exactly where these can go from clean momentum to total chop in like 2 candles. I'm watching this mid-15s area right here. If 1550-ish keeps getting defended, okay, buyers are still absorbing. But if it starts living under that and every pop gets stuffed, then this turns into churn instead of trend. Not saying chase it, just saying the level tells you whether the crowd is still in control. Now let's hit the actual underlying mRNA. This is the reason the whole weird Moderna complex is lighting up. The common stock, the leveraged ETF, the income ETF, all of it. mRNA itself is up about 140% on 82 plus million shares, and that's 11 times relative volume on a real mega liquidity biotech. So this isn't some tiny no volume print. I don't want to rehash the catalyst again. The point now is sanity check the tape. Around 150 is the psychological zone. If mRNA can keep building above that, mRNX and mRNY make more sense as event vol expressions. If mRNA starts rejecting 150 and bleeding lower, those wrappers can get really sloppy really fast because they're downstream of this move. YJ is the next one I want on the 1 minute because this is just absurd liquidity for a name like this. Yunji up about 136%, trading around 411, and look at the volume number, 106 million shares. The relative volume is the part that jumps off the page, basically 20,000 times normal volume. That is not a normal retail drift, that's an event tape. So for me, the whole read is around this $4 area. Above 4, if it keeps absorbing dips, okay, bulls are still defending the move. But if 4 starts failing and it can't reclaim, that's where these monster volume small cap moves can turn into a very fast fade. I'm not chasing that blindly. I'm watching whether buyers actually show up at 4, or whether every bounce just gets sold into. RDAC now. Totally different flavor, but same kind of heat. This is Rising Dragon acquisition, so we're talking SPAC/shell company momentum, not some clean large cap earnings chart. Stocks around 1360, up about 132%, 10.2 million shares traded, and relative volume is 237 times normal. The level I care about here is 13. If it reclaims 13 and holds it, that tells you the tape is still respecting that breakout zone. If it loses 13 and starts living below it, the character changes pretty quickly. And remember the backdrop here. Small float around 4.3 million, plus high dilution risk data on the board. So yeah, it can move, but the risk profile is spicy. This is not the kind of chart where you assume liquidity saves you on the way out. Alright, last sweep on the board before we kick it to small cap momentum. Quick hit first on mRNY. This is the YieldMax mRNA income ETF, so it's the slower cousin of that Moderna madness, but still up about 132% with volume running 17 times normal. Around 36-37 bucks. That's the area I'd keep marking mentally, because as mRNA keeps whipping around, these related products can lag, catch up, then suddenly disconnect. Now SKK, different story. Industrials name, engineering and construction out of Singapore, up 73%. But notice the rel vol, 3.26 times, not 200 times, not 60 times. So yeah, it's moving, but it's not the same nuclear liquidity event as YJ or TNON. On the cleanup side, PFSA is getting smoked, down 51%, high dilution risk, tiny float. Wedo down 41% even with 13 times rel vol, so that's real selling pressure, not just a dead tape. And Bivy is the bounce name, up 41% on 25 million shares, 244 times volume, but it's still a high-risk biotech around $1.36, so that can cut both ways fast. Good scan. mRNX, TNON, mRNA, YJ, RDAC were the heat, PFSA and Wedo were the damage. Coming up, we're staying in this lane and going straight into small cap momentum. Alright, quick small cap momentum hit. ZSTK is the one I want isolated here, because this tape is messy, but it's alive. Okay, look at this. ZSTK opens around 1.97, chops tight, then boom, that candle sends it from the low 2s up toward 2.68 with real volume behind it. We've got a 111,000 share burst on one of those breakout candles. So yeah, that part was not fake interest. But then, oof, look at that wick and unwind. It fades all the way back under 2, tags the 1.80 area, and even prints down near 1.52 on the day. That's not a clean trend. That's spike, rug, reload. Right now, the battle is basically the prior high zone, 2.68 into 2.74. Above 2.74, buyers are proving they can retake the highs. Below 1.80, this starts looking like another trapped microcap squeeze attempt. Now the headline matters here. Early this morning, ZSTK put out a release saying it has a $1 billion strategic contribution of meme core tokens, with the company headline referencing $25.19 per share. That's the spark. That's why this went from sleepy to chaotic. But here at the markets desk, I'm treating that as event fuel, not some clean fundamental read. The profile also has older operating company language around cannabis and CBD assets, while the fresh headlines are crypto token, redomicile, and financing related. So the stock is trading the story, the structure, and the float, not a quiet balance sheet re-rate. And this is where you do not get sloppy. Tiny market cap, roughly 4.4 million. Float is around 1.6 to 2 million, depending on the page. So when volume hits, it can fly. But the dilution page is loud. High overall risk, active shelf, active equity line, pending S1, 8 active shelves, and about 82 million raised over the last 12 months. That's a real overhead supply setup. So the tactical scorecard is simple. 2.74 is the clean upside reclaim line. 2.68 is the first resistance shelf, and 1.80 is the trapdoor level underneath. I'm not telling anyone to chase a $2 microcap with that dilution backdrop. We're just tracking where the tape confirms and where it fails. Coming up, we'll flip back into the movers board and see if this small cap heat is spreading or just rotating name to name. All right, let's reload the movers board. Fresh scoreboard, fresh tape, no wasted words. Top of the board is still wild. MRNX, up 271%. TNON, up almost 198%. RDAC, up 154%. YJ, up 149%. And mRNA itself, still up 136%. But backdrop matters. SPY is green, IWM strong, QQQ's red, VIX is under 20. So this is not some clean everything rips tape. This is selective, event-driven, small cap heat plus Moderna shockwaves. Board gives us the explosion. Now the 1-minute charts tell us who's still got buyers. NRNX first, because this is the loudest number on the board. Daily target 2x long mRNA ETF, trading around 116.31, up 271%, about 1.5 million shares. And scorecard check, that 120 cooling level we flagged earlier hit. Good read. Now the tape is super simple. Below 120, buyers are not in clean control anymore. Above 120, that's the repair attempt. But remember what this is, not Moderna common stock. It's a 2x product tied to the Moderna move, so it can whip way harder than the underlying. I'm watching 120 like a doorframe here. If price keeps rejecting under it, momentum is cooling. If it reclaims with real volume, then the bid is trying to reset. TNON next, and this one is absolutely trading like a headline small cap runner. Tenon Medical, around 1622, up almost 198%, and the volume is the whole story here. 29.5 million shares, about 73 times normal. So on the 1 minute, I'm not chasing the headline number, I'm watching control. Does that mid-16 bid keep absorbing, or does it turn into churn, where every pop gets sold back into the same zone? That's the difference between real continuation and just a crowded tape. Also, quick risk flag because it matters. Dilution risk is marked high here, so with a medical device microcap like this, the chart can look amazing and the capital structure risk can still slap you. For me, 16 is the sanity line on this read. Above it, buyers still have a pulse. Lose it cleanly, and this gets messy fast. Now, RDAC, totally different flavor. This is a SPAC/shell company momentum name, so you've got to read it like a flow trade, not like some clean fundamental re-rate. Price is sitting around 1484, up 153%, and the relative volume is just stupid, 250 times normal, more than 10 million shares through it. The line everybody can see is 15. If 15 becomes acceptance, meaning it's not just a wick, it's holding trade above there, then momentum traders are going to keep paying attention. If 15 rejects and it slips back into the 14s, that's where these SPAC-type moves can get really slippery because the liquidity looks great until the bid disappears. So RDAC 15 is the scoreboard level, clean and simple. YJ is the next one, and this is the liquidity monster on the board. Yunji around 434, up about 149%. And the crazy part is the volume, 108 million shares against an average volume around 5,300. That relative volume number is basically absurd, 20,000 times normal. So on the 1 minute, I'm not treating this like a normal clean little trend chart. I'm asking one question. Is it actually absorbing above $4, or is 4 just the last ledge before it gets heavy? If buyers keep showing up above 4, all right, the tape still has control. If it starts living below 4, then this can turn from momentum into air pocket really fast. Medium dilution risk on the board too. So even with the big volume, you respect the rug pull side of this thing. Now, mRNA is the important one because this is the actual underlying equity behind all those Moderna-linked products we've been flipping through. Moderna itself, 148.87, up 136% on almost 89 million shares. That's not some tiny rather. That's a real biotech mega move with a 59 billion market cap showing up on the same board as the wild ETFs. And this is why I keep calling 150 the sanity check area. MRNX is the 2x expression, MRNY is the income ETF expression, but mRNA is the source tape. If the common stock can actually accept above 150, that tells you the related products may keep chasing. If 150 keeps rejecting, then the wrappers can look dramatic, while the underlying is basically saying, hey, slow down. Markets mixed too. SPY green, QQQ slightly red. So this kind of biotech shock move is its own event, not just broad market beta. MRNY quick, because this is the mRNA-linked income ETF, not the straight equity. It's around 35.50, up 127%, with volume running way above normal. But this is the lag lead check now. mRNA was the main engine, mRNX was the leveraged rocket ship, and mRNY is the yield product version trying to keep up. So for me, 35.50 is the quick compare line. Above that and holding, it says the related product bid is still alive. If it keeps slipping away from that area, then the hot money is probably staying in the cleaner mRNA vehicles. Now loser side cleanup, because this is where traps live. PFSA, around 1335, down 51%, and the big thing here is the relative volume is not confirming panic the same way the gainers were confirming momentum. Tiny float, high dilution risk, but today's tape is more broken bounce than clean downside momentum. Wedo is a cleaner red board read, 1923, down 42%. Volume is elevated at about 13 times normal, so that's a real move, not just a random print. But again, after a flush like that, you're watching whether it bases or just keeps rejecting every pop. And LGCL, this is the caution name. 15-set stock, down 37%, 62 times relative volume, low float, medium dilution risk. Anything down here can move violently in both directions. Spreads get goofy, and it's not something I'd recommend chasing for day trading. If 15 cents can't stabilize, that's trap risk. If it reclaims and holds, then at least you've got a defined line. All right, movers board is clean. Next, we'll get off the scoreboard and flip back into the broader tape.
Thanks, Markets Desk. Quick paper account check from the Stock Whisperer. This is the show's simulated portfolio, not something to copy, and the new line on the screen is mRNA, short 50 shares, average 146.80, last around 146.65, so basically flat, up about $7 right now. The setup was simple. Moderna had the huge catalyst gap, but then it lost that 148 failed breakout warning level. So the thesis is not Moderna is bad, it's tactical. Big gap, failed reclaim, small size, defined risk. Now the bracket matters more than the opinion. On mRNA, the stop is 149.25. If it reclaims that zone, the short idea is wrong, and the paper book takes the small hit. The take profit is 137.25, and before that I want to see 142 break to confirm sellers actually have control. INTC is still on too, short 80 from 93.08, now 93.20, down about $10. Stop 94.20, target 87.80, but it really needs 92 to crack, or it's just chop. With SPY and IWM green and VIX still under 20, size stays deliberate here. Coming up, we can kick it back to the movers board.
Thanks, Stock Whisperer. All right, Markets Desk is pulling up Amazon on the daily. Big cap sanity check here. Tape's got some risk on underneath it. SPY up 0.6, IWM almost 1%, VIX under 20, but breadth is still mixed. Amazon's up about 0.5%, so this is not the monster leader today. It's the steady mega cap participant. Daily chart is the important part. This thing is not in a clean moonshot. It's a wide range, low around 225.55, high up at 287.20. And right now it's living in that 260 to 270 pocket, middle of the box. Now look at the daily structure. The big volume days actually mattered. The push from the mid-260s into the 270s had real volume behind it, and that run toward 284 had real participation too. But the sell pressure was real on the other side. That drop back toward the 226 area came on volume as well. So this isn't a clean trend day after day. It's a battleground range. Price is still above the 20-day, 50-day, and 200-day moving averages, so the broader backdrop is constructive. But RSI around 51, ADX around 23, that's not screaming momentum. That's controlled mid-range trade. For the daily, the Markets Desk is scoring it like this. Above 270, buyers start working back into the upper half of the range. Below that 260-ish shelf, and especially under the 20-day area near 258.4, it starts looking sloppy again.
Thanks, Markets Desk. Top of the hour reset here from the macro desk. It is 11:01 Eastern, and the tape is risk on, but not exactly champagne with two straws risk on. SPY's at 772.1, up about 0.6. QQQ's positive but barely, 718.5, up 14 basis points. The Russell's the better tell, IWM up almost 1%, so there is some appetite for smaller, higher beta stuff underneath the mega cap layer. VIX is down 2% at 19.25, so the market's risk thermostat is cooling off a bit, even with breadth still mixed. The two stories carrying the room right now, biotech heat off that Moderna and Merck melanoma phase 3 success, and then the mega cap AI headline stack. Microsoft chip efficiency chatter, Apple market cap, and leadership headlines. Coming up after this reset, we go right back to the market mover scan, then news intermission, then another mover's lap. Now the cross-asset story is actually cleaner than the stock board looks. Bonds are bid. TLT is up 1.54% near 82.92, IEF up 0.4 at 93.30, so yields are easing enough to help duration assets breathe. The dollar proxy is getting hit, down 0.82% at 27.91, while the yen proxy is up 0.84% at 57.96. Even if you only trade U.S. equities, keep one eye on that dollar-yen corner. When FX starts doing gymnastics, equities eventually notice. Gold is the loud one. GLD up 3.21% to 411.36. So this is not pure carefree risk on. That's a real rate and dollar story, with a little I still don't trust the couch safe haven bid mixed in. Oil's further too. USO around 131.76, up 0.84%. With EIA crude and gasoline inventories at 230. Crypto equities are also getting a tailwind. BITO up 1%, Coin up 5.7%, MSTR up 7.1%. Here's what I'm watching. TLT 83, UUP 28, GLD 411, USO 132 into the EIA print. And then FOMC minutes at 6 p.m., not for a Fed prediction, just for how the tape reacts.
Thanks, Macro Desk. All right, movers board, because this tape is risk on, but this board is still absolute chaos. SPY's up about 0.6, IWM's up a full percent, VIX is lower, so there is risk appetite out there. But look at this stack. MRNX is still the top print, up around 258% near 112. And remember, that's the 2x long mRNA ETF, not a normal operating company move. Then RDAC, TNON, YJ, and mRNA are all still piled right behind it. And scorecard check. RDAC did clear that 15 line from earlier, YJ did clear 4, TNON slipped under 16, good. Now we stop admiring the percentages and we go chart by chart. Are these holding or are they turning into chase wicks? Okay, MRNX on the 1 minute. This is the weirdest chart on the board because it's a leveraged mRNA exposure product. So yeah, it's up 258%. But that move is being pulled around by the monster move in Moderna underneath it. Price is around 112.15. Volume's already 1.58 million shares, and the market's desk line is simple here. 112 is the current control zone. Above 112, if the 1 minute candles keep accepting there, this levered ETF is still being bid. Below 110, that's the first real crack where I'd expect the tape to get sloppy fast. Oof, watch those upper wicks too. With a product like this, you can get a big green candle, then 2 minutes later, the bid just backs away. So MRNX stays on the board, but this is a tape read vehicle, not something to analyze like a normal company. RDAC next, and this is exactly the kind of name where I'm not trying to get cute with the story. It's a SPAC shell. It's up about 195%, and it's traded almost 11.8 million shares on what's basically a tiny normal volume base. The earlier breakout already hit, so now the whole question is, does 17 actually become accepted price, or was that just the squeeze spot? Price is sitting around 17.27 on the board, relative volume 271 times, float about 4.3 million, so yeah, the tape is hot. But with a SPAC-style runner, once the bid disappears, these can air pocket fast. For me, 17 is the line on the screen. Hold above it, fine. Buyers are still defending the breakout zone. Start losing 17 and reclaim attempts fail, that's when this can turn from follow-through into that classic SPAC fade. Alright, that's the market's desk for this hit. SPY and IWM still carrying. QQQ still laggy. VIX red. Stay sharp. Keep the levels clean.